Thank you for waiting. Special discussion, ESG investing and the TCFD disclosures in the with-corona and post-corona era will now commence. The facilitator of this session is Mr. Mizuno Hiromichi, Special Advisor of METI and TCFD Summit Ambassador. Now, I'd like to pass the facilitation to Mr. Mizuno.
Thank you very much, ladies and gentlemen. Welcome to the second annual TCFD Summit. As an ambassador of the TCFD Summit and advisor to Japanese government, I would like to thank all of you participating to this conference. It started last year as the first global conference, theming on the TCFD disclosure, and we really had the great input from the contributors last year. And unfortunately, with this pandemic, we have to host this year's TCFD Summit in this way. But if you look at the blind side, this is quite futuristic. Today we have two panelists from Japan physically attending here, and three panelists appearing, one from the UK, one from the continental Europe, and also one from California. So I'm really, to take this my honor, and I'll enjoy moderating this panel. So let me introduce today's panelists from, my end. First of all, Fiona Reynolds, CEO of the PRI Association. Welcome, Fiona.
Hi, Hiro. Thank you.
Thank you. And next is Hiroshi Ozeki, President and CEO of Nissay Asset Management Corporation.
Thank you, Hiro. I'm honored to be here.
Thank you. And the next is Marcy Forrest, CEO of CalPERS. Welcome, Marcy.
Thank you, Hiro.
Thank you for participating late at night in California.
You bet.
And the next panelist is Jun Aoki, Executive Corporate Officer, Chief Social Value Creation Officer of Shiseido.
Thank you, Hiro. I'm very happy to be here. Thanks.
And finally, and it's hard to see your face, Alan, but the Alan McLean, Executive Vice President of Royal Dutch Shell. Alan?
Hello, everyone. Delighted to be here.
Thank you very much. So today, we'd like to have these distinguished panelists to discuss the ESG investing at TCF disclosure in the with COVID or post-COVID era. But as I personally participate in many TCFD or ESG discussions, and most of the time we ended up talking what we already know. So this time, particularly this panel, given all these practitioners on the panel, I'd like to start with asking them to briefly introduce themselves, obviously, but the sharing what they have done since last TCFD Summit. So in other words, what they have done over the last 12 months and what they are planning to do this year. So let's start with the Fiona. So can you just share what do you have, the PRI has done and what the PRI plan for this year?
Sure. Hi, Hiro, and hi, everyone. I hope wherever you are in the world that you're all safe and well. So for our signatory base, those who aren't aware of the PRI, so we're a UN-supported organisation. We have our focus is really about integrating ESG into the investment process. So we work with investors. We have 3,000 signatories and they represent over 100 trillion US in assets under management. And for our signatories, in addition to COVID-19, acting on climate change and the transition to a low carbon economy remains at the top of their agenda. So we work obviously on a lot of things on climate, but I'll keep my remarks to things really that we've then been doing in the last 12 months that focus around TCFD. So the first would be really using our leverage as investors with corporations in terms of stewardship. So PRI is part of Climate Action 100+, and it is the biggest ever investor engagement, so between corporates and investors that's ever taken place. Has 500 investors involved, 47 trillion in assets under management. And the Climate Action 100+, which is active in Japan, has three key asks to investors, and that is around making a net zero commitment. It's around understanding the governance and the decision-making at the board around climate. But a key component of it is asking corporations to disclose in line with TCFD. And the focus of Climate Action 100+ in terms of companies is the 100 largest emitters in the world, plus 61 other companies in the hard-to-abate sector. And we have had a lot of success with Climate Action 100+. And so far, 30% of the focus companies have formally supported the TCFD recommendations. So action there, but more to be done. Then on the investment side, which is obviously the other part of the equation when it comes to the leverage that investors have, with UNFFI, our sister organisation, we created the UN Net Zero Asset Owner Alliance, which we launched last September at the UN Secretary General's Climate Summit. Now that's, when we launched it, we had 9 investors, or 12 investors, I should say. Now we have 30 asset owners, but it includes some of the largest asset owners in the world, Kelpis being one, but also Allianz and AXA. And it's really groundbreaking work because it's about asset owners making their own commitment to net zero by 2050 across their entire portfolio. And it's groundbreaking work because it hasn't been done before. We're also just about to come out with the near-term target. So setting a 2050 target is one thing, but we also need measurable shorter-term targets. And TCFD is really important to that work because investors need to understand what corporations are doing so that they can make their investment decisions. Then on the disclosure side, Hiro, we've been supporting TCFD. So we have everyone who is a PRI signatory has to report against a whole lot of indicators on an annual basis. And we've now made TCFD reporting part of our climate indicators. And some of that we have made mandatory to report. It's not all mandatory to disclose because people are still learning. And there was a 3-fold increase in investor climate reporting to the PRI in Q1. So we had 2,097 investors representing 90 trillion in assets under management who are reporting in line with the TCFD. As I said, we make it mandatory to report or be still voluntary to disclose, but that will be streamlined, and over the coming years that will change as well. So that's been really important for the market. And then just last week, just on the final thing that we've been doing around TCFD, and I can go into some more detail later if you like, we launched our first PRI 2020 leaders group that focused on climate reporting. And that was on the climate reporting to the PRI that included the TCFD indicators. So there were 16 asset owners and 20 investment managers who were recognised in that leaders group. And as I said, that included the TCFD indicators. So we're working with investors, we're working on disclosure, and we're working with corporations. We're also encouraging governments to encourage TCFD reporting for corporates and for the finance sector, and to mandate in some, we'd like to also eventually see this being mandatory for all.
Thank you, Fiona. So next, Hiroshi, can you just ask you to share Nissay Asset, the activities over the last 12 months, and then, what you plan to do for the remaining of this year?
Thank you, Hiro. My name is Hiroshi Ozeki, President and CEO of the Nissay Asset Management Company. And my company is a 100% subsidiary of Nippon Life Insurance Company. And AUM is 130 billion right now. And I became a CEO this March. And as everybody knows in this room or in this conference, Japan continues to lead the world in the numbers of TCFD supporters that exceeded 300 today. And at the same time, I would like to point out the supporters in Japan have a unique characteristic of sector distribution. The percentage of non-financial industrial companies among total supporters are quite high, as approximately 2/3, 65% in Japan. On the other hand, the percentage of non-financials in the EU, UK, or US are about 1/3. The purpose of TCFD is to promote the disclosure of climate-related and financial information that is important for investors' investment decision. We believe it is also meaningful that the percentage of non-financial companies will grow all over the world. Further to that, we would also like to commend the fact that information disclosure itself has been expanding along with the increase in the TCFD supporters. As described in the TCFD Guidance 2.0, published by METI this July, where there are good examples of Japanese companies conducting and disclosing very sound scenario analysis, which investors are paying close attention to. For example, Kirin Holdings scenario analysis is one of those good examples. And of course, Shell's energy transition report is another excellent example. In addition to that, in addition to increasing the number of supporting companies, we welcome the fact that there have been moves among those companies to enhance information disclosure and improve the quality of disclosed information. After COVID-19 pandemic, the good news is quite rare these days, but I would like to introduce one good phenomena to you in the investment world. The positive relationship between ESG ratings and the stock performance were more clearly observed during the COVID-19 pandemic. We, Nissay Asset Management, put our in-house ESG rating for more than 10 years. To simplify, let's say our higher ESG rating is 1, middle is 2, and lower is 3. When we look at the recent 9 months from the end of December 2019 to the end of this September, the cumulative excess return with our ESG rating 1 was plus 9.5% against the overall ESG universe portfolio, while the return with the ESG rating of 3 was minus 10.7%. The difference in performance between higher ratings and lower ratings was 20.2%. So G rating has long demonstrated a positive relationship with stock price performance since the launch of ESG evaluation in 2008 in our company. But we feel the positive relationship between E rating as well as S rating was clear at S rating and equity performance are becoming more distinct recently. Of course, even though this relationship was clear at this moment, it is not guaranteed in the future. But I believe this trend will continue for more years while the global transition and the business model transformation are going forward to tackle with climate change and COVID-19 pandemic. Thank you.
Thank you. So Marcy, can you share your, the view and plan, please?
Yes, thank you, Hiro. So I'm Marcy. I'm the CEO at CalPERS, and CalPERS is the largest U.S. public pension plan. But we have really been working hard in this area and identified within the last 12 months that climate risk is one of the top 3 risks to the sustainability of the CalPERS $410 billion portfolio. So since last year, we've also issued our first TCFD report, as well as some recommendations. This does set out our investment strategy on climate change. We've also re-identified or redefined ESG as it relates to CalPERS to get a little more action-oriented, to get a framework, a risk framework put together where climate, human capital, and then governance of corporate boards in which we're invested will be the priorities for CalPERS over the next 12 to 24 months. So, I think we all know here that the TCFD framework really has asked companies to report along two main categories of risk. The first one being physical risk, and sitting here in California and really here along the West Coast, we've had the worst fire season in the state of California in its history, and there are several fires still burning, several fires still not completely under control. So the physical risks of the assets that we have invested in California, it's quite alarming for people who live here as well as people who are invested here. The other part is transition risks. We know that risk comes from changes that would impact companies, impact consumer demand, consumer behavior, and then we have the rising expectations of stakeholders and shareholders. So our investment strategy around climate change is really in three primary areas. The first one is in advocacy. We've argued, and this has been within the last 12 months, we've had strong arguments at the SEC and the International Financial Reporting Standards Council that we need to include the TCFD reporting in mandatory, not optional, not voluntary, but mandatory corporate reporting so that investors like CalPERS and others have timely, verified, and standardized information by which we can make decisions. That does have us, helps us to manage the risk in the portfolio. Recently, we were also part of the first Commodities Futures Trading Commission, the CFTC Climate Risk Subcommittee, and that group has also issued their first recommendations, and this is coming from a U.S. regulator, so we think that those are promising developments as well. And then the second one is around engagement, and this is really our role as an owner of equity in companies. We are the conveners, and thank you, Fiona, for talking about Climate Action 100+, but being a co-founder of Climate Action 100+, which really focuses on the world's largest emitters of greenhouse gas emissions, and we consider those companies to be systemically important carbon emitters. And we're working with our fellow investors, including very honored to have GPIF in that group as well. And there are 10 companies in Japan who are being engaged through the initiative. And as Fiona said, there's $47 trillion of assets under management behind that group. And so that is quite impressive. And I won't go into a lot of detail about those goals. I think Fiona covered that quite well with governance, but specifically CalPERS is asking boards of directors to take responsibility for developing a transition strategy. And this includes making sure that executive compensation is also aligned with those goals. And that political lobbying is also fully disclosed. The cost of political lobbying, here in the United States, CalPERS has some concerns about that. That is hidden information for the most part. The second part, I think the second goal is for companies to set targets to reduce their greenhouse gas emissions across the whole value chain, and that to be net zero by 2050. And for most companies, this means halving their emissions every 10 years. So this is a significant target as well. And we are also part of the United Nations Net Zero Asset Owner Alliance. Very proud to be involved there as well. And then the third channel is really CalPERS's integration, and we've set a target of having material sustainability factors integrated into all of our investment decision-making processes by next year. And we're doing this through a set of asset class specific sustainable investment practice guidelines, which ensure we integrate climate into every decision that we make, whether it's a risk decision or an opportunity decision. We've also completed carbon footprints from 90% of our portfolio. That's including our global equity, our real assets, and our fixed income portfolios, and we're almost complete with our private equity portfolio. And then we also just completed a new tool for assessing physical risk. We're calling it PROC, which stands for the physical risks of climate change, and essentially that's zip code risk. And we're applying that zip code risk within the real assets asset class. to get a better understanding based on weather data and to see where those risks may need to be mitigated into the future. So, across those three channels, we feel that, strategy, partnerships are vital, and believe that, I can talk a little bit about some future steps we'll be taking, but I believe that we've made some good headway over the last year, but certainly the work is not done. So thank you, Hiro.
Thank you, Marcy. I mean, throughout my term at the GPIF, I really enjoyed the relationship with the CalPERS, and we kind of inspired each other and came up with a lot of the good ideas. So I'm really glad to see that you continue on that effort. So next, Jun, can you just share with your view?
Yes. Actually, I start to feel this is not super comfortable seat today. But anyway, for business, I want to share what we try to do. Actually, I wanted to be maybe referred by Hiroshi maybe next time. So anyway, let me share with you a few things. Actually, I just want to give you my background a bit. I joined the Shiseido Beauty Company 6 years ago as a Chief People Officer. So it's a responsible person for HR. And from last year, I take responsibility of the social value creation, meaning leading sustainability, SDGs, ESG management of the entire company. One of the reasons actually today, social value, SDGs, a very important reason for people to join. Not many people join the company just by economic value, but people really choose social value. So somehow I'm taking now this job and quite excited to make big changes. Last year we had a few progress because 2019 was a notable year because climate emergency became sort of a keyword by Oxford, and of course we all know the young generations are really very keen now. And for our company, let me share just 4 points. Very quickly. We officially, in January, we officialized the Sustainability Committee as sort of a decision-making body of management team right on the board to really, for all the CXOs, catch up with the recent evolution of all different issues, climate change and other SDG topics. And then we make a decision of long-term objectives, key actions, and together monitor progress. And second, we announced our carbon neutral long-term goal at 2026, and also other reduction of environmental footprint, including waste, water, deforestation, etc. And thirdly, for the first time, we announced, we disclosed our assessment of risk and opportunities regarding climate change. And this is really based on the thorough discussion in the committee I mentioned. On top of those things, also we have a long-term incentive plan as a part of a managerial elimination plan, and with the external social responsibility index as KPI. And global top positions, few hundred positions are eligible for this particular long-term incentive. So basically, all the global leaders should really aim at the same goal for this social value SDG site. Let me touch upon a bit of influence of COVID-19. We all, all of us experienced together unexpected reduction of CO2 emission. But the peak month, by the data of Nature Climate Change, the peak months, the worst economy situation globally, we reduced 26% year on year. So the 26% in the worst case, and worst economy, and we don't want to continue this, the restrictions forever. So it means it's really tough to reach at our goal, more long-term global goal. So, it's very clear we need disruptive innovation to really reach at -2 degree scenario, -1.5 degree scenario. So, so that's one of the reasons for us really decided to accelerate efforts for innovation. And it doesn't mean there are a lot of big things yet, but some climate change, some biodiversity, clean ocean, deforestation. So these are things we are now working on very heavily after this COVID. Thanks for listening.
Thank you. So Alan, thanks for waiting. That's your turn.
Thank you very much, Hiro. Good afternoon. I'm Alan McLean. I'm the Executive Vice President and Group Controller of Royal Dutch Shell. Shell, of course, being a global integrated energy company. I'm really pleased to continue Shell's contribution to this important dialogue. This year has been challenging for everyone. COVID-19 continues to have a severe impact on the health and livelihoods of people around the world. And at Shell, of course, we felt that impact just as everyone else has. We're not alone in thinking that COVID-19 will have far-reaching consequences. It will reset economies and energy demand, and we think it will also reset the hopes and aspirations of the world. And this matters because it will directly influence any economic recovery, future government policies, and consumer choices that will follow from that. In the past 12 months in Shell, we've been working hard to keep energy flowing, of course, and to help our colleagues, our customers, and communities to stay safe in this time. So we primarily focused on running our business, keeping it resilient and striving to be responsible. Our approach on climate, both on reporting and on strategy, is a fundamental part of that. So importantly, while we've had a net carbon footprint ambition for some time, and we've been reporting on that, of course, in line with TCFD recommendations, in April this year, we stepped up our climate ambition, and we now aim to be a net zero energy emissions business by 2050 or sooner, moving in step with society and with our customers. And that's going to take a lot of work. It's not going to be easy because of the necessary technologies like hydrogen powered planes or zero emission ships don't exist yet. And of course, today in our own business plans won't get us to where we want to be. And that means that as we go forward, our business plans will have to change. And we'll continue to be transparent about our progress towards those goals. But with the pandemic continuing to disrupt our world, all businesses are rethinking what they do and how they do it. For Shell, in the long term, global shifts urgently needed to tackle climate change, create a further challenge, and now we think is the time to accelerate. That means that within the last month, we've made announcements which put a greater emphasis on our progress towards our climate ambitions. Working towards that, we appreciate the flexibility that the TCFD guidelines give us to judge and to report on the material impacts of climate change. We've embraced the challenge to develop metrics that address our longer-term climate ambition. And we've expanded in our annual report that we published this year to provide more meaningful climate insights for investments and for our society. Moving to the future, we anticipate that more will be expected from investors, from customers, from our staff, and from the communities in which we operate. But being responsible is hard to define and even harder to measure. And being responsible goes beyond action and transparency on just climate. And many other aspects that we need to consider. We need to look at the whole spectrum of ESG, and many investors are doing the same thing. As a result, there's been a proliferation of ratings and indices and standards. Some, like TCFD, of course, are leading the way. But we would like to see a simpler world with a more coordinated and coherent action. For many investors, it's a bit overwhelming. And I think for us at times, we would see the same thing. So defining a common set of ESG standards is not going to be easy. Let's remember that common definitions for for financial reporting standards have taken quite a long time, and we of course continue to work on those. So let me just close with 3 thoughts. First, we really like to see a standard of standards for ESG reporting. That would become a common language that all businesses could use to respond to society's changing expectations and also the expectations of investors. And secondly, we would like to see that standard embrace the best of the TCFD guidelines. And thirdly, we think we need to move at pace, but also with humility, because it does take time to make these things stick. We won't solve ESG reporting overnight, but the more we speak the same language and use the same metrics and embrace transparency, the greater the chance of success.
Thank you. Thank you very much. It's really exciting to see all those progresses made since the last summit. I'd like to just pick up on the Alan's last point because, you know, I serve on the board of PRI, and the PRI has been pushing and urging the corporate to adapt to TCFD, and investor does so too. And, you know, corporates are responding by, you know, the adapting TCFD disclosure or any other ESG, you know, disclosure matrix. But I can sense that there's a lot of kind of like a frustration among corporates that when they disclose, they should be positively, you know, perceived by investors, but probably not always the case. And then it made them wonder, you know, whether TCF is the best, you know, disclosure standard to follow, or there are so many different ones, and you know, it's kind of led to the Alan's point, like they are actually, you know, looking forward to somebody set the standard. So I just want to start with the Fiona, because the PRI, as I serve on the board, I know sometimes you are so stretched, invited to all different, you know, the standardization initiative. But what can you just share your view on you know, how this like a standardization effort on the ESG disclosure will develop, and among those already, you know, the existing ones, how you know, take the TCFD is one of the major or like a most promising you know, climate related risk disclosure framework.
Yeah, sure. Thanks, Hiro. Well, first of all, I'd say in terms of climate that we do see TCFD as the best available framework that is out there. And that's why we've incorporated it into our own reporting. And that's why it's part of our dialogue, both with corporations, with investors, but then also with governments in how do we get governments and regulators to think and standardise reporting. We've been involved in the TCFD task force. Our chair sits on the task force, and so we've seconded staff to TCFD as well. So we've been very much behind it, and I think that TCFD has been extremely successful. If we think though more broadly about sustainability data or ESG data, there are a proliferation of standards that are out there, as Ellen already alluded to, and you have, Hiro. And there's a number of, if you add all of those together from an investor point of view, there's still a number of gaps. And there's still a gap in terms of how do you make sure that that information that you're receiving is actually decision useful information, that I can make investment decisions about it. So this is an issue that's come up from the PRI signatory base again and again over a number of years. So just recently we announced a partnership with the World Business Council on Sustainable Development to be able to come together to bring corporations and to bring investors together around the same table, to be able to work on those gaps and to feed in the investor and the corporate voice into a number of the things that are already happening. So, for example, SASB and GRI have been doing a lot of work on harmonising their standards, and that's great. There's still gaps, however, in the things that investors need. That doesn't cover everything. And some of the work covers the risk side, so the materiality side, And some of the work is starting to cover the outcome side, and we're trying to make sure that we can do both. So how do we cover the material issues, but how do we actually measure outcomes from our investments in the real world? Then we've seen that IOSCO and IFRS have also come out with announcements on doing more in this space. But again, we want to make sure that as the PRI and as the World Business Council, that we can make sure that we do plug the gaps that are there, and that it's not about trying to create a new standard or a new framework, but trying to make sure that the ones that are there, that we continue to have more harmonisation, but importantly, that the gaps are filled so that investors can get all the information that they need. And I'm sure Alan would agree, I don't know how many corporations that I speak to who say, I don't know what investors want me to do. There's all of these different frameworks out there. Everyone's asking you to fill in different things. They all want something slightly different. And it's taking up so much time. That is the problem that we're trying to solve for. And we think that we can, and that this is going to be a major focus for corporations and for investors over the next 12 months.
Thank you. And I just want to ask the the same question to Hiroshi and Marcy, because I understand you probably be asked by your portfolio companies that hey, come on, you guys are asking me to do more climate disclosure, and hundreds of them, pick one. And I just want to start with Hiroshi, because Nissay Asset Management did a sponsored research for GPIF on the different ESG disclosure framework before. But how do you respond to that question? I mean, how you see the TCFD as a major disclosure framework?
Thank you, Hiro. Firstly, it is necessary to disclose the long-term impact not only on risks, but also opportunity by utilizing the scenario analysis. Climate change or TCFD disclosure means both risk and opportunity for the operating company. While scenario analysis is a major feature of the TCFD recommendation for financial impact disclosure for both climate-related risks and opportunities. But it appears that the analysis and the disclosure of risks for long-term financial impacts are leading ahead of the disclosure using scenario analysis so far. Needless to say, disclosure of risk is significantly important for investors. But however, we in Nissay Asset Management, through focus and putting a great deal of active investment effort on ESG, we pay close attention to disclosure of information on opportunity. The scenario analysis analyzes what kind of financial impact can occur to companies under various climate scenario and time horizon. However, we hope that not only the scenario analysis are used for those companies who are concerned about the risk of financial impact due to climate change, but also those companies that are expected to benefit from climate change and enjoy opportunities where they can demonstrate their long-term potential by actively conducting scenario analysis. And secondly, when we look back the introduction of integrated reporting in the past, the information source mostly used by our equity analysts for ESG analysis is an integrated report right now. So since the international integrated reporting framework was introduced by IIRC in 2013, integrated reporting has been so prevalent that more than 1,700 companies worldwide and more than 500 companies in Japan have published integrated report. Although the TCFD has some unique contents, such as its specific focus on climate-related issues and its call for the use of scenario analysis, but the basic concept of disclosing the outlook for long-term corporate value is the same. Therefore, the TCFD can be taken as an enhancement to the integrated report already published by many companies. Given the prevalence of integrated reporting, there should still be potential for further expansion of disclosure by companies in line with the TCFD. That's my opinion.
Great, Marcy. So what's your, how do you react to that kind of questions from the corporate side? The importance of TCFD amongst others.
I mean, I think if I were to put, myself in the shoes of the corporates, a normalized tool or a normalized template that would be used, and the expectations from all investors would be, the same. That would certainly be helpful. And we want to do whatever we can to do that. As I indicated, we have applied the TCFD framework to our own portfolio, and that took quite some time and some resources to do that. But that data is now available to us, and we'll use that data to ultimately make decisions. But I also like to compliment companies who are really working positively with us, and Shell is one of those companies. They've taken the time to assess, report. They've set targets for emissions right across their value chain, and they've done this on scope 1, scope 2, as well as scope 3, which then I think leads to the next challenge, which is really the sector transformation. So if a company like Shell is really going to be able to transition or transform to a net zero emissions company by 2050, then the Shell customer base will also have to change. So one of the most exciting developments, I think, I get excited about this stuff, but in recent months is Shell calling on their customers to also adopt a net zero 2050 target. So we'll be holding the first series of roundtable meetings with different sectors later this month. And we're going to start with steelmaking to consider how we can develop more dynamic, interdependent sector strategies. So Climate Action 100 is a really good platform for us to engage with companies, for us to have a standardized way in which we have that common language, as was discussed earlier. But COP26 is coming up too, and that's another phase of work that we hope will be center stage for governments and for governments to understand what their role in moving these strategies forward. So, I think everyone has to do their part. I think corporates need to continue to do disclosure. So investors like CalPERS, GPIF, we have the information that we need to be able to invest appropriately, understanding the risks that we're taking, making sure we're being compensated for those risks. And then organizations like Fiona's, where she can convene a large group of asset owners together. And one of the outcomes, which it sounds like they're working on, is being a little more consistent in the framework that we can have these expectations from corporates into the future. I do understand that that can be a problem if CalPERS has one expectation and GPIF has another expectation. It is tough to resource that appropriately. So I think that would be my response at this point in time.
Thank you. I have been actually urging all the asset owners, asset managers to do their own TCFD reporting on their portfolio, including the one they are managing for their customers, because that's a starting point. And I'm very proud to see that the GPIF continue to improve their TCFD reporting. But it's actually, as the Fiona mentioned at the beginning, it's not 100% of the PRI signatories who has done the TCFD reporting, although they probably supported it. But what really divide those two groups, that the people, the investors who really does their own TCFD reporting before they ask the portfolio company to do so, and the other people who say yes, but they don't do it. Fiona?
Are you asking me, Hiro?
Yeah.
Yeah.
I just want to ask, what divide those two groups?
Yeah. So, well, I think there's a few things. First of all, as I was saying earlier, we have now made climate reporting mandatory within the PRI reporting. So every single investor who reports to us who is a signatory must report, and they must report in line with the TCFD. Now, we've focused, first of all, on the strategy and governance sections of TCFD. And So everyone is reporting on those, but we're also adding in the metrics, etc., into their next lot of reporting, and that will all eventually become mandatory. So all of our investors will do that. But I don't think that replaces doing the reporting with the PRI in line with our indicators, doesn't replace the need for investors to do a detailed TCFD report on their entire, portfolio in the way that CalPERS is doing. And I think that it's difficult to ask corporations to do things that you're not doing yourself. The other thing that I'd say within the reporting that we have seen through our reporting framework, even though in some cases the reporting is there, so yes, I've done the reporting, the quality of the reporting is not good. So we do analysis of that reporting. Only a few of the signatories would be in what we considered to be at leading in the types of reporting and the detail that they're going into. So I still think there's a lot of room for improvement in reporting for the investment community, and it will be something that we continue to push on, that we continue to grow within our own reporting, that we continue to encourage investors and corporations to do. I mentioned earlier our first leaders group on climate reporting that we just released last week. And I'd encourage anyone who's interested on either the corporate or the investor or the regulatory side, there's a report on the leaders group and what those investors have done. I'd encourage them to read it. We've also done we have a lot of guidance on our website as well for climate, but also around TCFD, particularly for asset owners. So there is a lot of guidance and support that is there. And there's a lot of learning from those who are already doing that we always make available. And we also have a lot of case studies. So it encouraged that as well. You're not on your own. There's plenty of guidance out there.
Good. So now the PRI is saying it's becoming a mandate for all the signatories, basically, representing the vast majority of investor community. So at least the investor does their own homework. So I just want to now ask the Jun and Alan that for particularly like Shiseido, you did the first TCFD reporting this year. What is your biggest challenge, and is there anything you would like to ask investors about their approach or their the use of your TCFD reporting?
Yeah. Yes. Thank you for asking me, Hiro. Probably answering to that specific question, I'm just sharing what I thought in my mind now. How much money, energy we are spending for reporting? Investor side, looking at all things, and company side. How much money we are now spending for real innovation to make the climate emergency resolved. So that's not one question. I really feel we want some winner, sort of a standard, real de facto standard of reporting. TCFD, personally, we can expect some more agenda is coming up, and some, the very precise and perfect methodology framework. Like, Hiro, you mentioned, you explained how you come up with this 17 colors, and finally it became a really good standard, de facto standard. So, let's put some of our energy not to work on just reporting, but really put money in real innovation. That's my initial feeling. Having said that, I really feel I already mentioned this, the huge gap between our long-term goal and where we are today. We cannot continue the way we do business today, and definitely, we need something new. And so my question is actually how we could really give a room for any of the source of innovation really surviving and coming up. So if I'm fine with a different type of rating, any methodology, but the too quick judgment by a small aspect of business or some quick rating may be dangerous because probably that might kill some of us sorts of business, small companies, startups, different group of people, talents. So somehow, my belief is really both investors, companies, any standpoint, and we really work together. How we can really, create sort of environment to really come up with a solution. And one of the things I actually feel today, this environment, TCFD, I mean climate change, is no more optional, it's must. And probably it's no more competitive advantage, but really it's a kind of a condition, really critical condition for survival of industry and society. So then, what's the framework for, for us to survive? One thing I really feel today we have to do is really we change our notion of value chain. So instead of sticking to traditional value chain, but extend value chain to incorporate external players who has expertise for certain innovation. So that's the way. So actually the cross industry, cross the company collaborations and open innovation is something we really have to pursue. So then how this element kind of future source of resolution of a climate problem, how investor community could really hit some great ideas to really nurture so these new force. That's kind of the big question, because of course we can talk about today's business, how we react to all this the requirement, but today as I mentioned, COVID-19 was really shocking benchmark. We cannot survive without something new as innovation. So meaning doing some reporting, of course description. But today, still I think it seems investors want a good answer of a good student. But I have a doubt. Probably we cannot be good student if the things is really evolving drastically, beyond our expectation. And so, that's why probably we really want to form, certain more stronger binded community consortium. I believe that's the reason I'm here today. So, that's something we could proactively form, the stronger tie of the different type of people, including some government. That's why METI is sponsoring this event. That's my thinking.
Thank you. I heard from the Shiseido CEO, Mr. Watani, several times that when he meet with investor, he wanted to discuss ESG issues, including climate, but the investor say, oh yeah, it's okay. What about the next quarter's profit, projection? So he said he was disappointed many times, and I think this is something we need to solve among the investor community. On one hand, we keep asking them to disclose those, the ESG information, but when they disclose it, sometimes they feel they're actually even punished for disclosing some negative or like risks associated with the ESG. We just need to change it, and we definitely want to hear from Marcy and the Hiroshi afterwards. But I just want to ask the Alan, because the Shell made a big statement like a 2050 net zero, or even earlier, as the oil and gas company. That's a really really strong statement. So what is your struggle internally, and what do you expected from the investor, or did investor react in the way you wanted?
Yeah, thank you. Indeed. I think we were the first major oil and gas company to set such an ambitious target. And we recognize, of course, that is ambitious, and that it's complex journey that that we are on, and that we need to be on together with, as has already been said, with many of our large customers, and of course this sectoral approach that we're adopting. So working with our customers and seeing them as part of an integrated value chain rather than just as customers who purchase our products. Working with them and working with those with whom they work to look at the totality of the carbon footprint of their particular sector. And that's an important way that we think that we're going to see that. I think the challenges we face from TCFD, of course, is and the opportunity which it creates is the comprehensiveness of it. You know, everything from governance and strategy through to metrics and through the proper understanding of the risks creates an enormous wealth of potential data. And of course, therefore, I think, as we've heard from some of the other panelists, the important thing for us as we go through this journey is that we continue to talk. We talk to investors just as we talk to some of the other stakeholders about the disclosures that we're making and the impact that they're having on their particular set of needs or particular set of ambitions as well. So making sure that the data that we are disclosing in the context of the TCFD recommendations are actually meeting a target. And in the context particularly of investors, you know, we believe that good information drives good decisions. So having this common language that we've spoken about to discuss and engage on climate risks and climate impact will drive better investment decisions. And of course, it's dollars that will drive decarbonization of the economy. So ensuring that we have that common language that we can all agree on, and that enables us a better engagement between companies and investors, I think is at the heart of the challenge and indeed the opportunity that we face. You know, we think we've made some bold commitments. We know that that's extraordinarily difficult to deliver on. The only way we can deliver on that is to move hand in hand with all of the stakeholders, whether that's investors, whether that's our customers, or whether that's society at large.
Thank you. I think I had a discussion with your CEO and Ben, and it was big decision, and he was also concerned about how investors respond to it. So I think we probably have like 2 or 3 minutes. So I just wanted to ask everybody to say the final word, and I would like to hear particularly from investor, the panelists, that how you think you will change your investment decision following the corporate, the more aggressive, the disclosure in terms with respect to TCFD, because we just need to support those companies like Shell, and she said, who decide to step up and do more disclosure, rather than just keeping tedious question, trying to figure, to find out the flaws in their scenario analysis. So, what is your reaction to those to corporate executives who are trying to be more cooperative with the investors, and what's your expectation out of their TCFD disclosure? Marcy?
Yeah. CalPERS is a long-term investor, and so I do understand that corporates have meetings with their investors and they're interested in quarterly returns versus everything that you just invested significant resources into an ESG report. But for an institutional investor like CalPERS, we're long-term, and we pay $25 billion in benefits every year to we have 2 million members in the state of California who are relying on those benefits. So returns matter, performance matters, but managing the risks matter. We think that those are highly correlated, that companies who are thinking about long-term risks, not just short-term returns, but long-term risks, and have a mechanism by which they can reassure investors that they're thinking about their long-term business plans. They're thinking about the risks, whether that's climate, whether that's human capital, whether that's not having a diverse board for as another example. So, we engage through proxy. We do these as private engagements. We're not out to, do any kind of, public humiliation in the way that we engage. But, these things really do matter to a long-term investor who's trying to accomplish 7%. We're discounting our pension liabilities at 7%, assuming that we can get that over the long term in the markets. And, and we have gotten that over the very long term at the 20-year, but there's a lot of volatility in that number. And what we are most concerned about is if companies are not managing these risks appropriately, one, their performance could be a lot better, and we need better performance. But two, we have to make determinations around whether the portfolio has stranded assets that, we try not to make divestment decisions anymore. We found that that's been pretty difficult to tell our investment team that we need to get 7%, but you can't invest here or there or anywhere. And so the divestment side has really calmed down. And but we need this data so that we can make investment decisions. And some of those investment decisions could be active calls in companies that we do not believe are managing their business well. So I think it's a combination. And I think this normalizing the data will get better over time, but it should be actionable.
Thank you. I think we need to finish now, but if you want to make some quick comment, Hiroshi, or you're done? You want to make a very quick comment? Yeah, please.
I believe the ESG analysis should not be boring Q&A or checking box things. And let me take one example: the conversation between one of our analysts and some palm oil related product producing company. And our analyst pointed out the potential risk to that company on their supply chain, because they handle with palm oil related products. So there are some, of course, environmental issues, and also human rights like child labor or others, and how to handle it. So one of our analysts keep asking them. And at that discussion or at that meeting, they didn't respond so well. But later, they strengthened their traceability of the supply chain, and they can appeal their supply chain soundness to the clients, and they can expand their sales in European countries or other climate or environmental or sensitive people. We would like to continue those kind of productive Q&A and engagement with companies.
So Mr. Wotani won't be disappointed if the Nissay Asset Manager analyst is in the meeting. Okay, so that's their promise. Okay, so thank you very much. We are on a journey to make this, TCFD disclosure work for the corporates and investors, and we have to make it a win-win, the outcome out of our group effort. So thank you, everybody, particularly, the people who are participating virtually. It is a great panel, and thank you very much. And I really enjoyed moderating this panel. Thank you.
Thanks, everyone.
Thank you.
Thank you, Alan, Marcy.
Right.
Thank
Bye.
you. Bye, Hiro.
Bye now.
Thank
Bye,
you very
everyone.
much, Mr. Mizuno and the panelists. Now we will take a break. After a short break, panel discussion 1 will start. Participants online, please go back to the timeline and join the next session, panel discussion 1. Thank you for waiting. Panel discussion 1, importance of evaluation based on materiality by industry will now commence. The facilitator of this session is Mr. Nagamura Masaki, Fellow and General Manager of International Initiatives, Corporate Planning Department at Tokyo Marine and Nichido Fire Insurance Corporation. Now, I would like to pass the facilitation to Mr. Nagamura.
Thank you very much, and hello everyone, and welcome to the panel discussion on sector-specific materiality. If you're interested in how to identify an organization's materiality, this session is for you. I'm Masaki Nagamura, Fellow and General Manager in charge of international initiatives at Japan-based insurance company Tokyo Marine. It's a great honor and pleasure to moderate this session. We have a strong lineup of panelists. Let me begin with a quick introduction of the experts sitting in front of you. Immediately next to me, we have, Dr. Fiona Wild, Vice President of Sustainability and Climate Change at BHP, participating online from Melbourne, Australia. Hi, Fiona. Great, thank you. Then we have Mr. Shunsuke Oshida, Head of Credit Research at Manulife Investment Management, Japan.
Thank you, Nagamura-san. I'm very glad to be here.
Thank you. Then we have Mr. David Parham, Director of Research at Sustainability Accounting Standards Board, or SASB in short, participating online from San Francisco, California. David?
Hi, thank you so much for the opportunity to join.
Great, thank you. And the fourth panelist is Mr. Toshihiro Yamauchi, General Manager, Corporate Communications Department at Sumitomo Chemical.
Good afternoon. My name is Yamauchi. I'm happy to be here today. Thank you.
Thank you all for joining the panel. Over the next hour, we will discuss the importance of evaluation based on sector-specific materiality. The topic sector-specific materiality was identified by many of those who participated in last year's TCFD Summit as one that deserves further in-depth discussion. So that is why this session has been set up. And speaking of materiality, in this panel, we will focus on financial materiality to frame the discussion in alignment with the scope of TCFD and SASB, which is distinct from the broader definition, such as the one set by the Global Reporting Initiative. Since my background is non-life insurance, allow me to draw from the non-life insurance industry experience. The industry's financial performance is challenged by the likely increase in the severity of weather-related natural disasters in the future, if climate change is to follow the so-called business as usual pathways. And the situation calls for insurance company management to display how climate-related risks are managed and contained. You can find more in the TCFD Guidance 2.0, which was released by the TCFD Consortium in July. Just so you know, TCFD Guidance is designed to assist those who are about to start disclosing climate-related information according to the TCFD recommendations. And the 2.0 version added descriptions on banking, life, and non-life insurance, as well as food industry. Now, back on track. The session aims to cover 3 objectives. Firstly, we will discuss the importance of understanding sector-specific materiality for both investors and investees, and how to help incorporate the aspect in the investment decision-making process. We have experts from the energy and chemical industry to offer their experience to guide the discussion. Secondly, we will touch on how companies can integrate climate-related risks and opportunities into corporate strategy and how to effectively manage them. Thirdly, we will look into ways to enable constructive dialogue or engagement between investors and investee companies based on sector-specific materiality. With respect to the format of the session, we will hear presentation from each of the four panelists, followed by moderated Q&A. Without further ado, let me ask each panelist to share her or his experience and insights along the context I have laid out. Let me turn over to Dr. Fiona Wild to kick off the discussion. Fiona, thank you for being patient. You have the floor.
Thank you very much. It's a great honor to join you here today. So thank you very much for the invitation. As Masaki mentioned, my name is Fiona Wild, and I'm the Vice President of Sustainability and Climate Change at BHP. BHP is the world's largest diversified mining company. We produce copper, nickel, metallurgical coal and iron ore, which are integral to supporting a low carbon transition. I'm also a member of the Task Force on Climate-related Financial Disclosures, so I've been very close to these discussions for many years now and looking forward to the opportunity to tell you a bit more. In my presentation, I'd like to show you that the identification of climate-related risks can improve strategic decision-making, that companies should determine the materiality of these risks on their own terms, and that disclosure and engagement on risks builds trust, capability, and resilience. A little bit about BHP first. So at BHP, we've been taking action on climate change for decades, and our approach has evolved from reporting operational emissions in the 1990s to where we are today with a much more comprehensive strategy that addresses a whole range of transition and physical risks. Climate change is a board governance and strategic issue at BHP, and climate risks are identified and managed as part of our enterprise-wide risk management process. We have a target to reduce our emissions by 30% by 2030 and a goal for net zero emissions by 2050. We have set goals to support decarbonisation in our value chains. 10% of executive remuneration is linked to achievement of these targets. And we use scenario analysis to help test our company strategy against a range of climate futures, from a 1.5 degree outcome to a more than 3 degree outcome. And I'd like to talk about those different pathways a little more. By examining these divergent pathways or scenarios, we can identify the biggest and most durable trends, determine the balance of risks that these external trends pose to the resilience of our portfolio and investment decisions, and identify how well placed we are to act on opportunities that may present. We also identify the signals required to monitor progress of these trends, because this helps to inform our strategic choices and, importantly, the timing of their execution. For example, our most recent analysis demonstrates that our business can continue to thrive over the next 30 years as the global community takes action to decarbonize. In fact, the greater the global efforts to decarbonize, the stronger the positive impact on demand for copper and nickel, as well as the increasing need for more steel to build wind farms and other decarbonisation enabling infrastructure. So on my first point, it is clear that the identification of climate-related risks and opportunities has improved our strategic decision-making and portfolio resilience. So moving to my second point, although all companies are exposed to climate-related risks, not all companies are exposed to the same risks at the same level of materiality. For example, I mentioned that our portfolio at BHP contains copper and nickel that are vital for electrification, and iron ore and metallurgical coal that are key ingredients for the steel that will be needed for decarbonisation infrastructure. But a different commodity mix within the sector would tell a different story. For example, a pure play energy coal company may expect to be more vulnerable to substitution with other forms of power generation, like renewables. From a physical risk perspective, mines are exposed to a whole range of risks, including water-related risks that can be exacerbated by climate change, from water scarcity to water excess. But each operation and water catchment has a different risk profile, and it varies across the short, the medium, and the long term, often amplified by climate change. When we think about materiality of risk at BHP, we determine this materiality by calculating an estimate of the maximum foreseeable loss, or MFL. The MFL, as we define it, is the estimated impact sustained by BHP in the worst case scenario for that risk. The worst case scenario considers all potential impacts without regard to probability and assumes all risk controls are ineffective. Interestingly, a report by KPMG stated that of the 250 largest companies in the world that define material topics in their sustainability report, 41% do not explain the materiality process. And without clarity around this process, it is hard to determine whether what is material to your company would also be material to another. So it's clear that companies should determine materiality of climate-related risks on their own terms, but importantly, be prepared to disclose the basis of that assessment. And this leads me to my third point around disclosure and engagement. I'm a firm believer that through disclosure and engagement, companies can learn from the practices of others and from companies within their sector and support risk reduction. For example, we're working with other mining sector peers and mining equipment companies to develop zero emissions mining equipment. And we're working with steel producers to invest in new technologies that can support sectoral decarbonisation and reduce risk for all companies in the steel value chain. Disclosure and engagement is also key to building trust between companies and their investors. At BHP, we've prioritised this for many years, regularly meeting with our investors to share our strategy, our action, the challenges we face, and seeking their perspective and insight. And this reaps rewards. We're able to understand how expectations are changing, gain support for our strategies and actions, and we continue to score well in climate-related investor benchmarks. It's my view that ongoing, frank and open engagement like this is key to building confidence and ensuring that we continue to learn and improve. So in summary, identification of climate-related risks improves strategic decision-making. Companies should determine materiality of climate-related risks on their own terms, and sharing approaches to climate risk management builds trust, capability, and resilience. Finally, all the information I've described today can be found in our recently launched Climate Change Report 2020 on the BHP website. The report we've put out is aligned with the recommendations of the TCFD, and it includes detailed scenario analysis across a range of temperature outcomes from 1.5 degrees to more than 3 degrees. And I really encourage you to read this report and others, and we'll be very happy to receive your feedback. Thank you.
Thank you, Fiona. That was very much inspiring. I've had the chance to take a quick look at your new report, but that also looks very fabulous. You're always ahead of the curve. We'd like to hear more from you, so please don't go away. Our next speaker is Mr. Yamauchi. Let us hear from Yamauchi-san about Sumitomo Chemical's experience.
Thank you very much for your kind introduction. Today, I would like to talk about Sumitomo Chemical's action to address climate change. I'd like to begin. Please show my slide. I would like to begin by giving you a brief overview of Sumitomo Chemical Group. Sumitomo Chemical is a diversified chemical company with a history that dates back over 100 years. We have been operating globally and actively investing in research and development. Engaging in a wide range of areas, we have built on our strengths as a diversified chemical manufacturer to seize various new business opportunities. This slide illustrates Sumitomo Chemical's principle for enhancing corporate value. It represents the idea that our business must benefit society at large, not just our own interests. Based on this philosophy, we at Sumitomo Chemical Group are committed to achieving sustained growth by contributing to developing a sustainable society through our business and creating both economic value and social value. In March 2019, Sumitomo Chemical identified material issues that the company will address as management priorities. We identified material issues for sustainable value creation, such as contributing to reducing environmental impact and solving healthcare issues. In addition, we also defined matters that serve as the foundation for the business continuation, such as safety, respect for human rights, and compliance. With regard to climate change, our material issues include the mitigation of climate change. Specifically, we are committed to reducing greenhouse gas emissions in our operations, while also providing solutions that contribute to the reduction of GHG emissions. As we work on our sustainability efforts, we are actively participating in initiatives of outside stakeholders. Here, I will introduce the WBCSD TCFD Chemical Sector Peripheral Forum. As many of the chemical industry's activities result in financial exposure around high GHG emissions, member companies in the forum shared a sense of urgency on dealing with climate change. On the other hand, member companies also affirmed that the chemical industry, which is supporting the foundation of society, has the potential to make significant contributions to society's entire greenhouse gas emissions by providing a new solutions to its broad base of customer industries. Based on this affirmation, the chemical sector TCFD guidance was formulated at the forum. It introduced model case of the integration of climate-related risks and opportunities into governance processes and example of effective disclosures of sustainable solutions initiative. This slide summarizes our action to address climate change in accordance with framework of the TCFD recommendations. The Sumitomo Chemical Group is working to address climate change issues on two fronts, seizing opportunities and addressing risks. First, as an example of seizing opportunities, I would like to talk about our Sumika Sustainable Solutions. We call it SSS initiative. In this initiative, we designate Sumitomo Chemical Group's products and technologies that help to address climate change or reduce the burden of the environment. And we seek to promote their widespread use and expand their sales. To date, we have designated 54 products and technologies and set their sales revenues as a key performance indicator, which the goal of achieving 560 billion yen by fiscal 2021, double the level of 2015 sales revenue. Next, I would like to introduce our initiatives to reduce greenhouse gas emissions as a part of our efforts to address climate change risks. In October 2018, our group received certification from the Science Based Target Initiative for our reduction target for greenhouse gas emissions. To achieve this target, we have made group's greenhouse gas emissions one of our key performance indicators, and we are pushing forward with reduction efforts. In addition, we have begun a supplier engineering initiative to encourage our major supplier to set their own reduction target. This slide shows a major sample of our initiative to reduce greenhouse gas emissions. We at Sumitomo Chemical Group would like to continue to actively communicate our action to address climate change to our stakeholders using the framework of TCFD recommendations. Thank you very much for your attention.
Thank you, Yamauchi-san, for sharing the evolving story of how Sumitomo Chemical is identifying materiality and putting that into action. It was also interesting to learn about how the chemical industry is working towards that direction. Thank you very much. We now have Mr. David Parham of SASB. Thank you, David, for staying up late. It must be around midnight in your time zone. Let us hear from you.
Yes, thank you very much. Very happy to join for the panel and very much worth staying up late for. So my name is David Parham. I'm the Director of Research Projects here at SASB and very much appreciate the opportunity to join my fellow panelists here as part of the 2020 TCFD Summit and wish I could be there in person to join you. At SASB, we're of course focused on developing disclosure standards for companies to help companies disclose efficiently and effectively on the financially material ESG issues that they face to their investors. And if we could go ahead and move into my slides, I'll take just a few minutes to introduce the organization and some of the work that we're doing around climate risk. Perfect, thank you. So I just wanted to share a few quick points to introduce myself and the organization I represent, the Sustainability Accounting Standards Board, or SASB. SASB is a non-profit standard-setting organization for financially material ESG information, and our mission is to connect businesses and investors on the financial impacts of sustainability. And we do so through the establishment of our 77 industry-specific disclosure standards, which are used by companies and investors globally. Next slide, please. Given this panel is focused on materiality, I wanted to briefly discuss how SASB approaches materiality. At SASB, we recognize that sustainability information is of interest to a wide range of stakeholders, including policymakers, consumers, employees, investors, civil society organizations, and others. At SASB, we're really focused on the subset of this information that is material to enterprise value creation, those issues that are financially material. And this information is especially relevant for users whose primary objective is economic decision-making, including investors. So our process to set our standards is designed to include issues that are likely to be financially material, or those that are reasonably likely to have a significant effect on the financial condition, operating performance, or market valuation of companies within an industry. And we assess this through our evidence-based process, which evaluates the extent to which an issue within an industry is of interest to investors, and whether it is associated with material financial impacts on companies within that industry. Next slide, please. So to focus in now on climate-related risk, if we look across the set of standards that we've developed, climate change is one of the most prevalent issues across our disclosure standards and is present in nearly all of our 77 standards. Of course, this panel is also focused on materiality by industry, and as we see on this slide, it's important to recognize that depending on the industry, the financial materiality of climate risk may differ. For an agricultural products company, for example, this may focus on impacts on crop yields. For a healthcare provider, like a hospital, it may focus on emergency preparedness for weather-related natural disasters. And I'm sure we'll have the opportunity to dive into this on a panel, but really want to emphasize that a key feature of our work is focusing in and accounting for these industry-specific ways in which climate risk manifests in a given industry, and then how we then move into defining topics and metrics that can help facilitate effective disclosure. Next slide, please. SASB is, of course, a big supporter of the TCFD's recommendations. We see the TCFD's recommendations as foundational to driving forward effective climate-related disclosure. And we really see SASB as being complementary to the TCFD's recommendations. And we're happy to see this represented in the recommendations report, with SASB being cited as a tool within the recommendations for how companies can disclose effective industry-specific performance metrics. And I really think that it's important to recognize the role that metrics and targets play within the context of the TCFD's recommendations. Metrics and targets are a critical part because they really allow for that comparable, measurable performance to help companies communicate the effectiveness of their governance and their strategy and their risk management, and how that translates through to measurable performance on the metrics they've identified against the targets that they've set. And on the next slide, I'll just briefly mention on my final slide, if you could advance, please. Thank you. I'll just mention that our support for the TCFD's recommendations, and particularly our focus on how we can help companies implement the recommendations effectively, led us to collaborate with our peers at the Climate Disclosure Standards Board last year to produce our joint TCFD implementation guide. This is a guide that provides practical step-by-step guidance on how companies can effectively implement the TCFD's recommendations, utilizing the tools and resources provided by the CDSB and SASB. You can find this resource on both of our websites, and we hope it'll contribute to the continued momentum we are seeing globally, and particularly in Japan, around the uptake and adoption of the TCFD's recommendations. And with that, I'll gladly close my opening comments and very much look forward to the discussion with my fellow panelists. Thank you very much.
Thank you, David, for letting us know of recent developments at SASB. The name SASB has gained popularity here in Japan, especially since Mr. Larry Fink touched upon Sesame in his letter. We'll come back with a couple of questions, so please stay awake for another 30 minutes. That brings us to Mr. Shunsuke Oshida. Oshida-san, you have the floor.
Thank you for introduction, Nagamura-san. I'm very much proud of joining the TCFD Summit as a panelist. Hello, everyone. This is Shunsuke Oshida, head of Credit Research Japan at Manulife Investment Management. We are very happy to be here as well as last year. Last year, our global head of ESG participated in third panel, Disclosure in Asia, Challenges and Opportunities, to discuss the matter at high level. Since the launch in May 2019, MIM Japan have been an active participant in TCFD Consortium, where we share our observation on current status of ESG, as well as TCFD best practice disclosure and analysis from the perspective of foreign asset manager. We also, please show the slide. Thank you. We also shared our thoughts and opportunity on and challenges in ESG and TCFD disclosure at a roundtable discussion between corporates and investors arranged by TCFD Consortium. It was a great opportunity to discuss and share our insights collected from more than 300 ESG engagement we've conducted so far. TCFD is a great opportunity for issuers to explicitly tell stakeholders their strategy to transform their business model towards low-carbon society. As we firmly believe that by doing so, issuers can attract not only domestic investors, but also foreign investors. Since early 2018, we have been proactively engaging with both Japanese and foreign companies on ESG. Comments I share today are based on our observation from what we call grassroots ESG engagement, where engagement happens from ground up. And I guess that our audience are wondering why credit analyst is serving as a panelist today. People may think that equity analyst or ESG specialist are more appropriate than credit analyst to talk about ESG and TCFD. And before discussing our ESG integration into our process, I'd like to tell the audience the reason why I'm here today. And this slide shows the 3 reasons why fixed income investors should incorporate ESG into their respective investment process. Firstly, 1 year versus 7.78 years. I wonder if anyone is able to guess what those figures stand for. 1 year, 1 year means average holding period of equity investors, whereas 7.78 years is the average maturity of corporate bond in Japan. Those figures indicated that expected holding period of the fixed income investor is much longer than equity investors. And second figure points to the fact that number of issuance of super long tenor bonds and perpetual bonds, mainly hybrid bonds, have increased in order to seek higher ROE and or to maintain credit ratings in case of large M&A and the low interest rate environment and unclear global economy. And lastly, as you're fully aware of, number of issuance of sustainability bonds, such as green bonds, transition bonds have also increased. Because of those reasons, we believe that ESG integration is a natural fit for fixed income investors, perhaps more so than equity investors. And this slide shows the example of our ESG integration. With respect to ESG integration, we have adopted two-way approaches, top-down and bottom-up. And top-down approach means qualitative assessment of climate risk we apply on portfolio level. We participated in developing carbon delta model as a pilot program under United Nations Environmental Program Financial Initiative, UNEP-FI. This model captures opportunities presented by climate change as well as risks. And our bottom-up approach includes assessment related to ESG materiality for each industry and issuers. This slide shows relative vulnerability to climate change risk for Japanese electric power companies. X-axis shows a percentage of coal thermal power plant, while Y-axis shows CO2 emission, and circle size indicates risk buffer. This lastly is the fact that companies in light top with small circle are the most vulnerable to climate change risk. It is also important to note that in case that the company in light top has technologies or innovation related to climate mitigation, such as carbon capture and storage, our credit story changes completely from where the company plotted in this slide. We try our best to assess both. Try our best to assess both ESG opportunities and risks from industry sector materiality perspective on fair basis as much as possible. Thank you.
Thank you, Yoshida-san, for sharing fixed income investors' perspective. Now that we have heard from all four speakers, as promised, let us move on to the Q&A part. We have received a good number of questions from the registrants, and thank you very much to those of you who have been kind enough to send in questions. I exercised my moderator privilege to select some of the most interesting ones to be answered by the panelists. The first question of my choice reads as follows. Are there examples of how risks and opportunities are identified and discussed at the management level to react as an organization, and how governance or in-house mechanism to reflect the insight of such discussion to their strategies are structured? Let me ask Fiona and Yamauchi-san to comment on this question. First Fiona and then Yamauchi-san.
Thank you very much for the question, and you're right, it's a big one to start with. I can provide an example from BHP's approach. So risk management is an integral part of BHP's governance. Our board and the Sustainability Committee and the Risk and Audit Committee, as well as senior management, are regularly provided with insights on trends and aggregate exposures for climate-related risks, as well as performance against our defined risk appetite. One of the things we have to be very conscious of with climate change is that it has a range of complex risks associated with it, and it's very pervasive. And it means that it can act as an amplifier for a range of other risks across BHP's risk profile. The way I think about climate change, it almost acts as a volume control for other risks that the group is managing. For example, the greater risk of extreme weather increases both the likelihood and potential impact of risks to the integrity of BHP's assets around the world. As outlined in the TCFD's recommendations, climate-related risks are usually grouped into two categories, and that's how we think of them at BHP: transition and physical risks. And transition risks can arise from policy, legislation, regulation, technology, market, and societal responses to climate change and the transition to the low-carbon economy. And we consider transition risks as part of strategy discussions, portfolio reviews, and investment decisions. We also look at physical risks, which can include those acute risks resulting from the increasing severity of extreme weather events, and chronic risks, which are associated with longer-term changes in climate patterns. And when we're assessing physical risk, we don't just think about the operations themselves that we're managing. We need to think about the vulnerabilities of our investments, our portfolio, our communities, ecosystems, and suppliers and customers across our value chains. It's also important to note that efforts to mitigate and adapt to climate change can also produce opportunities for BHP. We sometimes tend to assume that climate change is all about downside risk, but there are opportunities through, for example, resource efficiency, portfolio shifts, cost savings, and of course, building resilience along the supply chain to support business continuity.
Excellent. Thank you very much. Yamauchi-san, can we hear from you?
Thank you. Let me introduce Sumitomo Chemical's approach. Our dedicated organization to addressing climate change, that is Responsible Care Department, conducted a climate-related scenario analysis with receiving cooperation from relevant divisions. In making an analysis, we referred to the report issued by research institutions such as International Energy Agency and extracted anticipated situations in the future. Then made an impact assessment. The Sustainability Promotion Committee, which is chaired by the President and consists of members from internal directors, deliberate on the analysis content. The climate-related risks and opportunities are identified based on the deliberation results, and the result is reported to the Board of Directors.
Thank you very much. I think both cases illustrated very well how they're implementing the climate change into their management. Now, the second question goes like this. It may be easier to compare one industry with similar industries and companies in the same industry based on simple evaluation list. Could you give examples of good efforts and challenges to evaluate companies' creative response to their materiality? Let me ask David and Oshida-san to respond to the question. Starting with David, are you still there? Good.
I am still here. It's a great question and very core to the work that we do here at SASB. As I mentioned in my opening remarks, we really are focused on standards that look at the financially material issues that companies face. And climate, of course, is one of the most frequently occurring issues across our standards, really pointing to the pervasiveness of climate risk across the economy and within industries, very much echoing Fiona's comments that she just shared. But although climate risk is pervasive, it's also industry specific, and industries may exhibit certain common characteristics that are innate to their business models that can result in particular exposures to climate related risks or opportunities. For companies that are involved in heavy industry, for example, there's typically a greater reliance on energy, for example, and perhaps therefore an exposure to regulatory risk to the extent that regulations come into place that seek to reduce those emissions, whether they're scope 1 or scope 2. Other industries, like perhaps the apparel industry or the electronics manufacturing industry, may be characterized by complex supply chains and lean supply chains that may be particularly disrupted by physical climate risk, for example. So the point being that different industries will be exposed to climate risks in different ways, and to facilitate effective disclosure, being able to compare across companies within the same industries can be very important. That being said, each company is of course unique, and just as Fiona said in her opening remarks, it is ultimately the company that determines what is material to it. And there's really huge value in the company describing, exactly as Fiona said, its unique strategic approach to managing climate-related risks and opportunities, its process to identify them, and of course its governance over those risks and opportunities as well. And this is why the disclosures recommended by the TCFD are so critically important, as they really provide that effective guidance to allow companies to discuss these important elements. And where there are those common exposures to risk factors or opportunities within an industry, what our engagement with our investor stakeholders has emphasized to us is that it can be very helpful to have comparable information on company performance. And this is really where standardization can play a helpful role. There's an obvious analogy if we look to traditional financial accounting. Companies, even within the same industry, can employ very different strategies to competitively differentiate themselves within an industry. And it's of course important for investors to understand each company's unique strategic approach, but at the same time, in order to compare how those companies are performing, we've of course developed standardized ways for recognizing and reporting revenue, for calculating costs, for valuing assets, etc. So certainly acknowledge that ESG information can be very complex, but this combination of a powerful framework in the TCFD to provide companies with guidance to effectively disclose their governance strategy and risk management, combined with comparable performance metrics, can provide a highly useful set of information to capital markets to give them that decision useful information that they need. And interestingly, in the TCFD's survey and status report that they did last year, they found that 72% of the investors surveyed identified a desire that companies would increasingly use standardized industry-specific climate-related metrics where possible. Lastly, I'll just say, of course, I'm fortunate to be joined on this panel by several companies who provide great examples of effective climate-related disclosure that really brings this to light, explaining the unique ways that they're responding to climate risk or capturing opportunities, and then disclosing effectively performance data in a way that leads to comparable and decision-useful information.
Great, thank you. Excellent. May I have Oshida-san some comments?
Yeah, as David mentioned, the difficulty in the TCFD and ESG disclosure is a balance between the comparability and uniqueness related to the materiality. But not only the issuers, but also asset managers that faces this dilemma. We as investment professional would like to evaluate issuers' uniqueness of effort on transforming their business model towards a low carbon society. On the other hand, we as an asset management company will be required to assess our portfolio or portfolio level impact on climate change risk on comparable basis with other asset managers. Issuers' engagement on materiality may have three phases, namely selection, no materiality, strategy for managing materiality, and lastly, disclosing outcomes. As for selection of materiality, issuers can refer to industrial framework for each industry set by like the SASB materiality map and TCFD guidance 2.0. Large companies like BHP and Sumitomo Chemical will consider their own materiality by themselves. However, it is noted that response to climate change risk shall be participative or inclusive. Many investors guess that not that large company are wondering how to select materiality. In this sense, many investors believe that to adopt industrial approach based on generally accepted framework for selection of materiality seems to be reasonable. In terms of the disclosing outcomes, the outcomes will be uniquely determined by materiality. So the same approach is applicable. On the other hand, the last piece, strategy for the managing materiality seems to have different characteristic. Let me consider auto industry. Representative materiality and KPI related to climate change risk for the industry is obvious: CO2 emission per unit. It seems to be very simple. However, automakers' strategy towards low carbon society may be diversified. A company may seek for all environmental technologies, and another company may select and concentrate a strategy. A company focuses on the electric vehicles, and another company focuses on the hybrid vehicles. What is very important here is uniqueness of strategy, not simply similarity or comparability of the strategy.
Great. Thank you very much. Yeah, I think that the audience, especially those who are information preparers, have learned a lot from you. That was very helpful, I thought. Now, the next question also goes to you, Yoshida-san, a bit technical one. Environmental impact assessment and outcome of life cycle assessment, or LCA in short, has difficulties in making business-to-business comparisons. Are these factors decision useful in investments? What kind of challenges are there in taking advantage of these assessments?
Thank you, Nagano-san. This is a very difficult question for many investors. But many investors recognize that there's mainly three challenges to assess issuers' engagement in ESG and TCFD based on the life cycle assessment. Firstly, scope of life cycle assessment may be different from industry by industry. For example, this difference may be important for assessing the circular economy. For example, steel industry. As you know, steel products are recyclable. What is the life cycle of the steel? How investors should distribute CO2 emission to the manufacturing stage? The secondary, the scope of scope 3 is also the issue. Many investors recognize issuers like Sumitomo Chemical try their best to reduce CO2 emission per products. However, issuers cannot control the CO2 emission during their usage. In this sense, both issuers and investors need criteria for how to capture their scope 3. And lastly, how we should assess the value of the CO2 reduction is also the issue. In case that CO2 value is converted to the dollar term or JPY term through some kind of carbon tax or the other measures, investors can easily assess the different business model on a fair basis. At this moment, the issuers and we investors seems to be in the process of making consensus for issue 1 and 2. We as investor feel making consensus for those issues through constructive engagement among issuers, investors, and other stakeholders, including government, is beneficial for all stakeholders. If possible, it will be sample Yoshi situation. And as for current effort on this matter, Sumitomo Chemical's life cycle assessment for its products, which covers issue 1 and 2, seems to be the best practice on this disclosure.
Excellent, thank you very much. Now, since you mentioned, since you touched on Sumitomo Chemical's practice, may I solicit comments from Yamauchi-san?
Let me answer in Japanese. 当社のですね、取り組みご紹介いただきまして、ありがとうございます。私ども、そのライフサイクルアセスメントを行って、開示をしておりますが、先ほどご紹介いたしましたSSS の認定商品、これについてのですね、ライフサイクルアセスメントをやっておりますが、なかなかこれは非常に難しいものでして、当社としても、試行錯誤をしながらですね、進めていると。ようやくここまで開示できるようなところまで来ているというような状況でございます。で、なぜ弊社としてこういったところに力を入れているかということでございますけれども、やはり化学産業といいますと、生産過程でその GHG を排出する、こちらの方でですね、どちらかというとそのネガティブなイメージを持たれていることが多いかと思うんですけれども、一方で当社の製品が世の中の GHG をですね減らすことに非常に貢献しているということがございます。いくつか例を挙げますと、このSSS の製品の中にはですね、例えばリチウムイオンバッテリーに使われる、絶縁膜のセパレーター、これはですね、電気自動車なんかに使われますので、こういったところで社会の GHG が減らせる。それ以外には、例えば航空機のですね、機体に使われる複合材料、これにこれを強靭にする添加剤として弊社のスーパーエンジニアリングプラスチックなんか使っていただいてるんですけど、こういったものも飛行機の燃費向上なんかにですね非常に役立つと、こういった製品を幅広く私ども提供できておりますので、やっぱりこういったところをぜひですね皆さんにも注目してアピールしていただきたいということでございます。私ども統合レポートの中にもですね開示をしておりますけれども、私どものグループでGHG のその排出という意味ではシナリオの1と2を足してだいたい720万トン年間でございますけれども、一方でこのライフサイクルアセスメントにおける削減量っていうのは6200万トンということで、簡単に比較できるものではありませんけれども、非常に大きなですね、貢献ができているというふうに自負しておりますので、こういった点をぜひアピールしていきたいということで、努力をしております。ただ、いろいろ課題もありまして、今現在はその GHG の削減量というところまでは、解除できておりますけれども、やはり投資家の皆様や比較可能性というところを考えると、これをファイナンシャルインフォメーションの方に、いわゆる金額換算というようなところが次重要になってまいりますので、こういったところは今後の課題かなというふうに考えております。以上です。
Thank you very much, Yamauchi-san. By the way, LCA, in other terms, avoided emissions, are recognized in the TCFD's recommendations as one of a viable metrics under its final report. So I just wanted to mention about that. Now, given the time constraint, this will be the last question that we can cover. And the last one goes to Fiona. In addition to the complementary relationship between disclosure and investor engagement, what is needed to increase the number of disclosures and improve the quality? Does it make sense to encourage the industry-wide effort?
Thanks very much. I think the most important thing is to recognize that disclosure is a process, and it's okay to take the first step, sometimes tentatively, rather than waiting for everything to be perfectly aligned with, for example, the TCFD's recommendations. So, for example, companies could start by comparing their current disclosures to the TCFD recommendations to determine gaps, and then disclose their intention to align with the recommendations of the TCFD. Next, they could assign oversight to board committees and management, and maybe implement new processes for information and data collection and reporting. Then they could incorporate some of the climate-related risks we've talked about into their risk identification and assessment processes, and disclose information related to governance and risk management recommendations. And then finally, companies may move towards identifying useful metrics, setting targets, developing relevant scenarios to really test the resilience of strategies, and then choose to disclose that information around strategy, metrics, and targets. From my perspective, as a member of the task force, I think the success of our recommendations should be measured not just by encouraging those who already do a good job to do an even better job, but by encouraging those who are doing little to take the first step in disclosure. Because ultimately, if we're lifting the standards of disclosure for the majority of companies, then we can manage climate risks and, importantly, deliver climate opportunities much more effectively.
Beautiful. Thank you very much. That was a great message. Now we are running out of time, so I need to wrap up the session. As a quick reflection of the discussions we've had, we learned the importance of incorporating long-term perspective and recognition of sector-specific materiality into investment decision-making. We also learned the importance of the investee company side to establish a mechanism where potentially significant climate-related risks and opportunities are discussed and identified at the corporate management level. While we have seen obvious technical challenges, such as the discussion on LCA, to put everything in a single set of common understanding, we have refreshed our understanding that both sides of the investment spectrum need to continue engaging with each other with sector-specific features in mind. With this, I conclude the session. Thank you all for your participation, and please join me in thanking the panelists for their excellent contribution with a big round of applause. Thank you very much.
Thank you very much, Mr. Nagamura and the panelists. Now we will take a break. After a few minutes break, panel discussion 2 will start. Participants online, please go back to the timeline and join the next session, panel discussion 2. Thank you for waiting. Panel discussion 2. Implementation of scenario analysis and case studies will now commence. The facilitator of this session is Mr. Tezuka Hiroyuki, Fellow of JFE Steel Corporation. Now I'd like to pass the facilitation to Mr. Tezuka.
Thank you for introduction. My name is Hiro Tezuka. I'm a fellow in charge of climate change at the JFE Steel Corporation. Also, I'm chairing the disclosure and reporting working group at TCFD Consortium, Japan. It's my honor to be here as a moderator of this panel discussion, session 2. This panel focuses on the issues associated with scenario analysis, which is a very unique part of the TCFD and probably the most challenging part of, for the reporting companies. Today, we have representatives both from reporting companies and financial sector who are the user side of the disclosure. Let me introduce the panelists. On my right is Mr. Yasunori Iwanaga, Managing Director, CIO of Amundi. Then on the screen is Didem Nisanchi-san, Global Head of Public Policy, Bloomberg, and the TCFD Secretariat, participating from the United States. Very good, very early morning, Didem-san. Then to her right is Mr. Atsushi Shibukawa, General Manager of Risk Governance Office, Risk Management Department, Mizuho Financial Group. Next on the screen is Ms. Francesca Gostinelli, Head of Group Strategy and Scenario Planning, NL. She's participating from Europe. Then the right-hand side is Mr. Ryosuke Mizouchi, Senior Executive Director, Kirin Holdings Company. Before starting the discussion session, I'd like to ask all the participants, panelists, to make a brief presentation on the activities and experiences relating to TCFD. At first, I'd like to ask Nisanchi-san to explain the recent development of TCFD as a member of TCFD Secretariat. So the Nisanchi-san, floor is yours.
Thank you. Good afternoon. It's truly an honor to join you today. I'd like to thank the Ministry of the Economy, Trade and Industry, the TCFD Consortium, and the World Business Council for Sustainable Development for organizing this event and inviting me to speak about the work of the TCFD. In my remarks, I will provide an overview of the momentum we're seeing around the TCFD and preview guidance on scenario analysis that the task force will be publishing later this month. If we can turn to slide 3, please. Slide 3, please.
It's on.
This slide contains highlights of some of the major milestones we have achieved since our creation, along with the growing number of supporters in Japan. In just over 3.5 years, we have gained support for the recommendations from 100 CEOs to over 1,500 supporters today. The vast majority of TCFD supporters are companies representing a broad range of sectors and industries with a combined market cap of 12.6 trillion. Almost 700 of these companies are financial firms responsible for assets of $150 trillion. In Japan, thanks to the tireless efforts of METI, the JFSA, the Ministry of the Environment, the TCFD Consortium, and many others, we see the largest number of TCFD supporters, growing from 25 supporters in 2018 to over 300 today. There's also growing support from governments and regulators around the world. If we can please turn to slide 4. This slide highlights some of the public sector support and initiatives which show the global reach of the recommendations. Also on this slide, we highlighted Japan's 2 TCFD summits, as these have been instrumental in advancing the understanding and implementation of the recommendations. The combination of these summits, along with the initiatives undertaken by so many, have been really powerful for mainstreaming the TCFD recommendations not just in Japan, but also in serving as a model for other national governments who are interested in increasing support and implementation amongst companies in their own jurisdictions. Now I'd like to talk about the task force's recent work as we prepare to issue 4 publications later this month. Slide 5, please. Over the past year, the task force has undertaken work on our 3rd status report, which will feel familiar to most of you, as it provides an overview of companies' disclosure practices in alignment with recommendations. The task force also prepared guidance on risk management integration and disclosure, which is aimed at companies that are interested in integrating climate-related risks into their existing risk management processes and disclosing that information. In addition, the task force has also developed a public consultation document on forward-looking financial metrics to better understand the evolution of metrics that are being used by asset owners, asset managers, banks, and insurance companies. And last but not least, the task force is also publishing guidance on conducting climate-related scenario analysis. And I like to describe some of the key points in that guidance. It's important to note that we worked very closely with an external group of practitioners from companies across different industries to develop this guidance. As a matter of fact, one of my co-panelists today, Francesca Gastinelli from Enel, was one of those experts, and we're grateful for her contributions. From these companies' experiences, we identified several important elements of an effective scenario analysis process. I will highlight just a few. One is the importance of education, working on building capacity and knowledge base inside a company to understand the role of commercial impacts of climate change and the role of scenario analysis. As an example, Landlease, an international real estate developer, produced a simple in-house video for its employees that highlighted each scenario connected to key facts, indicators, and data to Landlease using images, written prompts, and thought-provoking questions to fully immerse the audience in these future worlds. The short videos, in essence, made the data and knowledge accessible. Another important element is leadership. The need for the board and senior management to actively support and engage in scenario analysis is critical. Another important feature is that scenario analysis should not be treated as an independent one-time exercise. Scenarios are most effective when integrated into a company's regular planning and risk management processes. For example, a pharmaceutical company, Novo Nordisk, integrated its scenario analysis into its existing processes instead of creating parallel ones. Another company made scenario analysis a permanent consideration of the board strategy process. The task force's scenario analysis guidance provides more practical information along these lines for companies undertaking scenario analysis. Finally, if we can move to slide 6, please. A quick preview of our findings of the current state of disclosures. Based on our review, we found disclosure of TCFD-aligned information increased over the last 3-year period. However, we found level disclosure related to the resilience of a company's strategy remains low. Now, the task force recognizes that it takes time for companies to gain experience and comfort with using climate-related scenarios and disclosing the resilience of their strategy. We also recognize that such disclosures are not necessarily the first disclosures that companies work on when starting on their implementation journey. Nevertheless, we believe that a company's disclosure of how its strategy might change to address or could be affected by potential climate-related issues is a key step to better understanding the potential implications. We hope that our practical guidance publication will further help companies in their efforts around scenarios and in disclosing the resilience of their strategies. Thank you very much.
Thank you, Didem-san. Thank you for updating the recent development at the TCFD. So now let's start the short presentation of case studies to share the experience of the panelists. Let me begin first. My slide, please. JFE Steel is the second largest steel making company in Japan, and steel is a major division of JFE Holdings, which consists of steel, engineering, and trading businesses. Our annual sales is about 3.5 trillion yen. That is about 36 billion US dollars, and we produce about 28 million tons of crude steel annually. Today, let me briefly explain about our CSR report 2019, in which we disclose our first TCFD reporting. Actually, we have just published our 2020 version of our CSR report, but it's just being published and there is no English version of that. So let me apologize that we share the 2019 version of the reporting. Next slide, please. On May 27 last year, JFE made an announcement that it has endorsed TCFD. This was probably one of the first mover of the energy-intensive industries to declare that we endorse the TCFD. By that, we committed to disclosing information on our responses to climate change risks and opportunities for sustainable growth, including scenario analysis. Our first TCFD disclosure was published in our 2019 CSR report, which I just explained, in which as much as 6 pages we dedicated for TCFD reporting. Here are the pages. We explore our scenario analysis based upon IEA's Sustainable Development Scenario, 2-degree scenario, and a new policy scenario, which were widely viewed as global standard climate scenarios. Based on those scenarios, we developed our own 2-degree and 4-degree scenarios. Next slide, please. This is a result of a scenario analysis. As for the 2-degree scenario, we intensively discuss about the risks and opportunities associated with our steel and engineering business. Steel is a typical energy-intensive industry and inevitably use coal in reducing process to make iron from iron ore. So it was a big challenge for us to develop the 2-degree scenario. But globally, we were among the least carbon-intensive producer of steel from iron ore. So this meant that we already had the best available energy saving and CO2 reduction technologies. IEA assumed long-term sustained or even steady growth of steel demand even under the 2-degree scenario, because steel is regarded as a necessary basic material to sustainable development and climate resilient society. So we do have the market. This means that we might have opportunities for growth if we commit to continue developing global leading CO2 saving steelmaking technologies, or more ambitiously for longer term, zero carbon steelmaking process, which has not yet been developed or commercialized yet. We could be a leader of such transformational process. Actually, we have already started the R&D of such innovative technologies, and we could show some examples of the effort in the following pages in our disclosure. Carbon price in 2-degree scenarios seem to be a serious risk at first glance. But since IEA scenario assumed global common carbon price in the scenario, in fact, if the impact could be neutral as far as global competition concerned. In fact, if only Japan for a few developed countries impose high carbon price and other regions are not following, then that cannot never achieve 2-degree. Next slide, please. Since JFE Steel has been focusing on the development and manufacturing of high-grade value-added steel, we have many so-called eco-products, such as ultra-high tensile steel. Those eco-products contribute to reducing CO2 emission in the use phase of those materials by enabling lighter vehicle for fuel-efficient cars. So being supplier of such eco-products, we should have business opportunities in the course of social transformation toward carbon neutral society. we listed up some example of such product contribution toward the 2 degrees scenario. Obviously, there are risks associated with 4 degrees scenario, particularly all of our integrated steel works are located in front of the ocean. This is because raw materials are imported from overseas and our products are shipped from our port to both domestic and international customers. So ensuring sustainability of value chain is a serious issue under 4 degree scenario. But being in Japan, we have been experienced a lot of natural disasters such as earthquakes or the typhoons. We have a bunch of experience to cope with such the event. So we disclose our measures, how to keep business sustainability under the 4 degree scenario. So this was our TCFD disclosure. Since this was first a challenge in TCFD reporting, it was a tough mission for us. But to our honor, this CSR report was received the superior award of the 23rd Environmental Communication Award hosted by the Ministry of Environment this year. So that was so far the success. And there are 4 success key factors for this. The first the factor was the commitment of the top executives. We intensively had a lecture series for the top executives to understand and get involvement of this the TCFD process. The second factor was the involvement of not only the management, but also the environment, not only environmental management people, but also R&D, sales, management, operation, and the finance people. So broad range of people participation to the process was the part of the success factor. Self-development of future scenario was difficult. So the third point was we basically based upon our scenario on IEA's 2 degree and 4 degrees scenarios. Then finally, focusing on opportunities was the very important factor for the key success. Because disclosing not only the risks but the opportunities and sharing that opportunities with the financiers was a very good incentive for us to be the part of the TCFD disclosure. So thank you very much for the listening my presentation. And then let me switch over to the Iwanaga-san for his presentation. So the Iwanaga-san, floor is yours.
Okay. Good evening, good morning, and good afternoon to you all. My name is Yas Iwanaga of Amundi, Japan. For those don't know very much about Amundi, let me make a sort of a quick introduction. Amundi is an asset management firm based in Europe. We are number in Europe, and we are ranked as a top 10 in a global table. Well, to us, responsible investment is one of the 4 founding factors. So we are sort of very serious about it. And we are one of the initial signatory of UN PRI back in 2006. And also the firm has developed its unique ESG analysis framework or methodologies over the last 10 years. By the way, the company rates about 8,000 companies globally using the external and internal data and analysis. Let me sort of briefly show the, I forgot to show my presentation slide. This is a sort of, what Amundi is. And Amundi is trying to proceed, make advance its 3-year plan. And we would like us to really make ESG as a mainstream of our investment processes. When you say responsible investments, there are sort of multiple ways to achieve it, starting from a negative screening to positive screening or proxy voting and engagement, and ESG engagement. And today's topic, TCFD's scenario analysis, is pretty much pertained to ESG integration, where we would like us to explore the returns or economic profits through integrating ESG factors. And climate change is one of the sort of key issues that we have to sort of consider. Okay, let me sort of briefly talk about ESG integration and what is it. Well, I have posted a kind of a corny formula of a discount cash flow, and TCFD scenario analysis is actually pertains to both denominator and numerator of this formula. Well, the denominator is about discount rate, and through good enough disclosure from reporting companies, we would like us to really assess what the risks they have in their business. And we also sort of like to understand how those risks would translate into their operation going forward. So this is where we try to integrate both non-financial and financial factors. And we like to adjust, we calibrate the discount rate when we sort of really understand the firm's resilience in light of climate change or actions being taken by it. This is about the denominator part. For the numerator part, it's about the future. It's about cash flows going forward. Again, we like to integrate both financial and non-financial factors. And if we understand how climate changes would affect the company's future business or future operation and cash flows or free cash flows, we really like to understand and incorporate in our financial modeling. And we also sort of like to understand how those elements would translate into financial performance at the end of the day. I know it's not really sort of easy to really assess or translate the impacts of climate changes into financial numbers, but we would like to know from a scenario analysis of the reporting companies, what could be the maximum impacts, for example. So by so doing, we like to integrate all those non-financial and financial factors in our valuation exercise. And the goal is we like to sort of find out companies with sustainable business models, which should give us excellent returns through mid to long term. That's how we try to, this is something that we like to achieve through our ESG integration. Okay, so I have touched on what we do in ESG integration. And in this chart here, I wanted to illustrate how we operate. I have this three-step process in mind. Again, it's related to TCFD scenario analysis. First step is to understand risk. As you know, the investors face the information asymmetry, and without being told, we'll have no way to understand what the businesses are and their risks involved. So we look to reporting companies to have a better level of disclosure, both financial and non-financial issues, in particular, the impact of climate changes. This is where TCFD scenario analysis come in. And we would like us to understand the risk. This risk is actually different from financial risks that we are sort of, we are used to, because it's like a sort of a tail risk. You can't really sort of model it. But we really understand what the sort of a tail risk is and try to incorporate in our analysis to the extent possible. Again, we need a good input. This is about sort of understanding risk part. This is step one. And step two, it's about, so what? In a world of risk management, people always look at the risk numbers and risk scenarios, but we are really interested in knowing, okay, what will be the actions? What about the sort of reactions? What are the sort of business strategies to address those risks being identified? Again, in our ESG integration, we try to be forward-looking and try explore the investment opportunity going forward. So we like to hear more about stories about the businesses based upon the analysis, including TCFD's scenarios and others. And the third step is investment decision. And it is where we consider other factors and non-financial issues, macroeconomic environment, or financial, fiscal, or monetary policies. So the message here is that we really need a sort of good enough sort of input, both the current understanding of the risk, climate risk, and reaction of the sort of businesses, such that we can make a good investment decisions or informed decisions where possible. We have to be humble here. The user must try sort of its sort of best effort to really appreciate what is being disclosed by reporting companies. So it's a sort of mutual efforts, both the user side and reporting company side. That's it for me. Thanks.
Thank you, Iwanaga-san. Okay, next, I'd like to invite the Shibukawa-san to make your experience the case.
Thank you very much, Tezuka-san. Thank you very much for this opportunity today, and everybody, good afternoon and good morning. My name is again Atsushi Shibukawa. I'm working for Risk Management Department and in charge of Mizuho's Climate Change Risk Management side. Could you move to, thank you. Mizuho Financial Group is one of the three so-called Japanese mega banks, and we are the oldest bank in Japan. We have a large client base around the globe and great achievements such as the green and sustainable MLA or the renewable project financing APAC region last year. We made a lot of important steps past 12 months, including our first ever scenario analysis and releasing TCFD report. I think our TCFD report is the first in Japanese banks. You can find the detailed information about what I'm going to speak today in this TCFD report on our website. Then, this is what we did for our scenario analysis last year. First, we qualitatively look into the high-risk sector, which was identified as TCFD recommendations. Then, we picked up sectors for scenario analysis based on our high-risk evaluation and our exposure size. I will touch upon the physical risk briefly because this is not our financial. Under the qualitative analysis, we picked up the real estate sector. We worked with the consulting arm of the insurance company and ran Monte Carlo simulation. And as a result, it would not have a much impact on Mizuho's domestic portfolio. Then, as for the transition risk, we picked up oil and gas sector and utility sector because they are evaluated as high risk in our qualitative assessment. Eventually, they are consistent with the carbon-related assets defined in the TCFD recommendations. We utilized sustainable development scenario and new policy scenario in the World Energy Outlook by IEA. And these scenarios have projections for world electricity generation by fuel on technology. For example, power generation by coal in 2040 would be 26% in NPC or 5% in SDS. Then we treated overcapacity as a stranded asset, calculated financial projection, and inputted these figures into our internal credit rating system for credit cost calculation in 2050. The goal at this moment was not only to grasp qualitatively, but also to find out how these results could be linked to our strategies. Then we add a kind of flavor on IEA WEO scenario. That is, we introduced dynamic and static scenario. I have already explained that about overcapacity would be treated as a stranded asset. Then, in addition, there would be undercapacity for renewables and other resources in each scenario. Under the dynamic scenario, firms get finance and invest into these opportunities. Then, in short term, this will increase the indebtedness, but in the long term, firms will be financially better. So, we regarded the difference between this dynamic scenario and the static scenario as the effect of our engagement. Mizuho put emphasis on engagement, and this analysis makes the importance of engagement very transparent. Internally, there were discussions like, should we really disclose these numbers? And frankly, I'm not sure this is the right way or not to start. But I think the high-level conclusion on risk will not change much, even if we took a different approach. By the scenario analysis, we are able to demonstrate quantitatively that important risk is a transition risk, that business structure change can bring us a win-win with our client, and that engagement is therefore important. Those series of discussion among our top management, awareness toward climate change risk has risen considerably, but the concept has yet to penetrate to our entire organization. As some of front office may want to pursue a business in short-term perspective, I would say that it is still on the way. And finally, financial institution has an important role to play in this agenda. In our scenario analysis, clients who have an action plan to climate change risk is less risky to us. We can also say to our shareholders and stakeholders that we are supporting decarbonization, even we increase exposure to carbon-related sectors. If such a client have an action plan to net zero society in long term. In that sense, we, Mizuho, have a very high expectation for our client for the TCFD disclosure. I think we will change our risk assessment whether each client recognizes and has an action plan to deal with climate change risk in the future. That's it from me. Thank you very much.
Thank you very much. Thank you for the Shibakawa-san. It's kind of interesting that you're representing not only the financier, but also a reporting company. So your experiences should be very rich. Next speaker is Francesca-san. So could you explain your the case? Francesca-san, floor is yours.
Thank you very much. I really thank the organization for inviting me today. Very happy to be here with all of you. So first of all, if we go to chart 2, I cannot see the chart on screen, but anyhow, to present ourselves, I'm working in NL. So next chart. Enel is a utility company with a very wide global footprint, and we are an integrated company, very active in 3 of the main fields for the energy transition. So having 46 gigawatt renewable capacity installed already, 73 million end user connected to our distribution grid that are diffused mostly in Europe and South America, and 71 million customers that we serve. Recently, we have reached very good results, and these very good results comes also from the strategic choices we have taken that are integrating sustainability fully in our strategy. So if we go next, what we decided to do last year was to certify our CO2 emission path to show the decarbonization path of our company with the Science-Based Targets Initiative. So basically, the first commitment is to reach a 70% reduction since 2017 in 2030 for direct emission, and a 60% reduction on indirect emission, the so-called Scope 3, within the Science-Based Target Initiative. This is aligned with the well below 2 degrees, and we'll do our best to align that to 1.5 degree scenario as well. As you can see, the amount of CapEx that we devolve for our growth are mostly driven by 4 SDGs that we keep very much in our mind, so orienting more than 90% of our capital expenditure there for the growth of the next years. If we go next. Basically, the first thing we did, thanks to TCFD guidelines, has been to have a reference framework, because the reference framework is very important within a very big company to let people understand where you want to go and how you want to reach there. So you have time horizons that run from short to long term, and within this time horizon you can have physical impacts, acute, that are short to long, chronic, that are mostly on the long term, and then you have transition impacts. Transition open up risks and opportunities, of course, for whoever business worldwide, and transition is already occurring, so it's like a medium to long term. After that, when you speak about climate variables that you want to use for your users, for your calculation, you have to do a very important downscaling activities within your company. And that's very important to have a consistency. So we use a lot of external references that were already mentioned before. We use a lot of data inputs that comes from our analysis as well, in terms of climate data, macroeconomic and commodity context, technology evolution, cost, consumer behaviors, and policies, of course. All this together has to design a scenario which is not only a climate scenario, but is a climate and energy scenario to understand which could be the possible evolution of the energy systems where we operate in all different countries, because it's not just one global scenario here. You have to have very selected country-related scenarios, and then you keep talking with people. That's very important as well. It's a very important part of the science, in our opinion. The dialogue, both internally to our company and externally, is very relevant to achieve better and better results. So if we go to next chart. As soon as your potential futures are ready, for example, last year we selected an RCP 8.5 as a worst scenario, of course, and an RCP 2.6, which is 1.5 degrees aligned. You need to make some steps for assessing your impact. So first of all, you need to identify the phenomena that are relevant to the business. So the one you want to map, but you're not willing to map everything, even though it doesn't affect your business. So you need to select. Then you have to develop the link function in between that phenomena and what is happening into your operations. The event trend, so the intensity and frequency from the scenario data on that particular phenomena, and then the impact calculation, which is not a formula written everywhere. You need to think about it and try to understand. And then you take strategic actions. Actions might be mitigation or adaptation, because both of these two streams are very much active. If we go next, so basically this year, 2020, we decided to publish an integrated annual report. The annual report is opening up with our purpose, so open power for a brighter future. We empower sustainable progress, because we wanted here to represent the storytelling that we are carrying forward, which is sustainability's value. So we've been integrated non-financial KPIs with financial KPIs in order to let the reader understand how this goes hand in hand. And I want to stress that this is not the final point. This is, as Jidem was saying before, is a journey. We're learning a lot. It's not an easy journey, and we're very proud of the steps we're taking forward. Thank you very much.
Thank you, Francesca-san. Then move on to the Mizochi-san. Could you share your experience?
Yes. Before I start, Kiren is very honored to be referred as a good example of scenario analysis by Ozeki-san of Nisei Asset a few sessions before. Let me start by quickly introduce Kirin. Yes, Kirin is a beverage and pharmaceutical company with net sales revenue of about $18 billion and the first Japanese food company to support the recommendations of TCFD. This flowchart shows the development of scenario analysis in Kirin since 2018. We conducted extensive library research to study the impact of climate change on our key agricultural ingredients and carbon pricing. We were able to find many papers on carbon pricing and a sufficient number of papers on the impact of climate change on the yield of agricultural ingredients, but only a few papers on the resulting impact of the price of agricultural ingredients. Since the yield decline due to the global warming will be outside of the historical range, we cannot simply extrapolate the existing elasticity curves. Understanding this limitation, the findings from our scenario analysis were convincing enough to start developing our strategy for climate change. Sharing the result of scenario analysis provided a great opportunity to facilitate a discussion on climate issues with our top management and board members and develop their attention to those issues. One of the findings from our scenario analysis is that there is a material difference between 2-degree scenario and 4-degree scenario in terms of the financial impact, which endorses the enhancement of mitigation measures such as the renewal of our science-based target from 2 degrees to 1.5, and our initiative in Australia to become a carbon neutral brewer powered by 100% renewable electricity. As for adaptation measures, we found that the climate impact on black tea leaves would be relatively small in the highland of Sri Lanka. So in order to secure both sustainable procurement for Kirin and sustainable farming practice for Sri Lanka, we expanded our technical and financial assistance to obtain Rainforest Alliance certificate for small tea farms. We also learned that the climate impact on coffee beans would be greater than on black tea leaves. Since coffee and tea are substitutable to some extent, a part of demand for coffee should shift to tea if the price of coffee increases by more than that of tea. Kirin has a coffee substitute tea product named Espresso Tea Latte to facilitate such demand shift. The demand shift from coffee to tea is an opportunity for Kirin because Kirin has a much higher market share in tea category in Japan. The increase of barley prices due to the global warming is a risk for our beer business. However, this risk can be mitigated by utilizing our technologies of making good tasting beer from sugars, which are much less volatile to climate change. The global warming would also likely increase the incidence of infectious diseases. Kirin could take this as an opportunity by promoting its original lactic bacteria, which is proven to support the maintenance of immune system in healthy individuals. In concluding my presentation, I'd like to note that the disclosure in accordance with TCFD facilitates not only engagement with investors, but also the involvement of our top management and board members on climate issues. So as a sustainability officer, I would like to recommend the leveraging of TCFD and scenario analysis to make our work easier and to make our world better. Thank you very much.
Thank you, Mizouchi-san. So we have heard various the case studies and probably the strugglings of the companies reporting scenario analysis. So having heard the short presentations of those, I'd like to ask the panelists to comment on what you learned or what you'd like to say more on from your side, starting from Iwanaga-san.
Thank you, Tezuka-san. Well, my key takeaway is the reporting companies spend lots of time and effort to put together scenario analysis and to maintain the level, increase the level of transparency of their businesses. I really like the substitution between tea and coffee in response to their price changes very much.
Okay, Didem-san, do you have a comment or?
Sure. I think it's really remarkable to see how companies are embracing scenario analysis in very sophisticated ways to manage their risk and identify their opportunities. I think, we saw from the presentations how various frameworks are being developed for linking risks with impacts, linking scenarios with static and dynamic business responses to evaluate risks and how they are used as a basis for engagement with companies. And I think clearly the presentations really showcase the iterative nature of scenario analysis and that it's not one and done type of exercise, but a multi-year commitment. So I think, from the TCFD Secretariat perspective, it's really important for companies to start their journeys on implementation and conducting scenario analysis and start to kind of clearly think through how they're going to be disclosing the resilience of their strategies. And companies will learn from just as much from doing the exercises themselves as they will from watching other companies, even in different sectors and industries, also going through similar exercises.
Thank you. And then Shibukawa-san.
Thank you very much. The most important point when I learned and heard from all the presentation is that my presentation is really covering both financing side and also a reporting side. Then we can understand and we can talk to our investors and our clients at the same time with our scenario analysis. Then I can make my understanding really deeply tonight, and I will feedback with my colleagues tonight about today's discussion.
Thank you. Francesca-san.
Yeah. I really think that it is clear that there's a lot of brain power on these topics. And in my opinion, it has been clear from all presentation that the time which is invested here is invested in a strategy as a whole for business. So I think that has been a remarkable achievement, and it clarifies a need for business investors, financial community to think it over, to make actions more actionable, I would say. And I think we are on the right track.
Thank you. Then Mizuuchi-san.
Yes, actually, I'm very interested in the new report, which Didem is about publishing. I have a question for you, Didem. Who are the target audience of your new report? Companies which are considering to start scenario analysis, or companies struggling with scenario analysis, or companies who are trying to further improve scenario analysis?
Thank you for that question. I think really our target audience is companies who are starting out to consider the implementation, but we are obviously hopeful that there will be practical examples and recommendations in our guidance documentation that will be good fit for all of those audiences that you listed.
Thank you very much.
Okay, thank you. And my impression for this, the first round of the comments is that there are various approaches to scenario analysis, and different sectors are focusing on different issues and the key points. So there is no one size fit all, but we need to learn about what areas each sectors are focusing on, and where are the most important issues to be taken care of, and so forth. So far, the reporting companies are now struggling to make the best the stories to tell in the scenario analysis. But probably from now, the recipient, the sector, such as the investors or financiers, also need to learn the variety of the scenarios to be delivered, and how to best utilize those scenarios. So that's probably one of the challenges of the TCFD in the coming days. Okay, and I have the couple of questions from the audience pre-registered. So let me ask the first one. This is a question for the disclosing the companies. What kind of changes have occurred within your company through the implementation of this scenario analysis? So perhaps Shibukawa-san is probably the first for the disclosing side.
As a disclosing side, okay. I would say that this is not only of the TCFD scenario analysis, but I can say that our awareness by top management was very, very enhanced, because as I introduced in my presentations, we also established a kind of board governance framework, or many other things as explained in the TCFD recommendation. And such a kind of discussion in board and top management really make a kind of to be shared what is the climate change risk.
Thank you. Francesca-san, do you have any comment?
I fully agree with the colleague on awareness. So I think the path we embraced is neither easy or simple nor quick. So the awareness on something that is considered somehow very technical is very important, because top management, board of directors, all managers are really involved in this process. So we involved a lot of time in raising awareness and in keep on explaining the basics and in involving the business in our evaluation. So this is a very wide and spread process along all the business and all the function within the company. That must be taken really into consideration for streamlined results, I have to say.
Thank you. Mizoguchi-san, you have anything?
Yes, I agree with Shibukawa-san's point. In my case, the literacy about climate change among top management dramatically improved, and they become very cooperative. They're very understanding about the need of the reduction of greenhouse gas. And externally, TCFD makes it easier to engage with investors by using the same language.
Thank you. From my experience, also the preparation of scenario analysis and the disclosing was very efficient to make the deep the engagement with financial sectors because we could tell the story how we view this the very difficult environment and how we are going to cope with strategically. So that's probably one of the very important value of this the scenario analysis. Okay, the second question is to the financial companies. Do the financiers or investor come to know the necessity or to evaluate and support the innovation of the companies, reporting companies based upon the scenario analysis and the engagement process? Iwanaga-san, do you have any comment?
Sure. From an asset management company's perspective, I think the step 2 that I mentioned is really key and pretty much related to making innovation. And well, we would like to know the responses that companies are making in relation to climate changes. And if we come to know the company is planning to increase the capex on specific technology and others, then we really understand what it is. We also understand, is it really endogenous or dependent on some other technologies or wishful thinking? We would like to examine how feasible, plausible the new technology or innovation happen. So, on that regard, we can really leverage on the messages or stories embedded in the TCFD scenario analysis from a user's perspective.
Thank you. The Didem-san, can you comment on this innovation process?
Sure, happy to. I think from a TCFD perspective, the disclosures, including around scenario analysis to assess a company's resilience of its strategy, is a foundational step toward making a market in transition. And if successful, it could really usher in a transition as a new asset class. This could certainly create new products and services, both in the financial and non-financial sectors, which, if they scale to size for the challenge, could really lead to new opportunities. If every financial decision takes climate into account and ultimately have access to capital be dependent on a credible transition plan, then no sector of the economy is really immune and will have to innovate and or really kind of suffer the consequence of the market forces.
Thank you. Shibukawa-san, you are the part of the financial,
yes, of
the
course.
reading side of this report. So could you comment on this?
Yeah. Thank you very much again. I really agree with Didem-san said. We shouldn't focus only risk side. When we talk about the TCFD, we should always look at not only the risk, but also the opportunity side. And also, as I explained in my presentation, we are really supportive for the innovation and business structure changes. And then, frankly speaking, I'm not sure how much meaningful for the numbers on the client TCFD report itself, but we would like to examine, or we would like to look at in detail about linkage between the strategy and report numbers. And also, as Iwanaga-san said, what is the feasibility? What is the step towards what was described in the TCFD report? That's a really important point to look at from finance side. Thank you.
Thank you very much for the comment. Okay, unfortunately, we are running out of time, so let me wrap up the takeaways of this session. Obviously, everyone shared that this TCFD scenario analysis is not only the scenario analysis, but the kind of internal learning and awareness process, so that you can enhance your internal corporate management discussion. What do you see the uncertain future, and how you can prepare for that? So that's a very valuable part of this the TCFD initiative. There is no time to discuss, but I'd like to raise one point of the future possible potential value of this process. That is, so many companies are disclosing the future scenarios based upon TCFD requirement. So the recipient side, financiers or investors, are getting those various the scenarios. So there might be the opportunity for the financiers, investors, recipient side to coordinate the general innovation cycle using those knowledge and informations among the various sectors or the technology owners. So that could be the future value of this the TCFD scenario analysis, but it's an open-ended question. Let me conclude, but before that, I'm asked to make a kind of a PR of a Ministry of Environment. This scenario analysis is a very challenging part of the TCFD. But the Ministry of Environment of Japan prepared a practical guide for scenario analysis in line with TCFD recommendations, both in Japanese and English, and it's on the website of MOE. So if you are wondering how to make your scenario analysis starting, this is one of the areas you can rely upon. So thank you very much for participating, and this is the conclusion of this session. Thank you.
Thank you.
Thank you.
Thank you very much, Mr. Tezuka and the panelists. Now we will take a break. After a few minutes break, keynote and panel discussion 3 will start. Participants online, please go back to the timeline and join the next session, keynote and panel discussion 3. Thank you for waiting. Keynote Climate Innovation Finance Strategy 2020 will now commence. The speaker is Mr. Yamashita Ryuichi, Director General of Industrial Science and Technology Policy and Environmental Bureau at METI. Mr. Yamashita, please.
ただいまご紹介に預かりました経済産業省の山下と申します。よろしくお願いします。私のスライドをお願いします。クライメートイノベーションファイナンス戦略ということでお話をさせていただきます。まず、我が国は、環境と成長の好循環とこのコンセプトの下でですね、気候変動対策を成長戦略とし続けて、令和元年の6月に閣議決定いたしましたパリ協定、長期成長戦略で3つの大きな柱を掲げました。ここにあります、まず1番として、イノベーションの推進ということであります。これは、技術的にはかなり困難な課題があっても、これを社会実装可能なコストで実現をしていくんだと。こういうことで、エネルギー環境分野の革新的イノベーションを推進するということで、本年の1月に革新的環境イノベーション戦略を策定いたしました。そして G20 の国立研究機関との研究拠点として、ノーベル賞学者であります吉野先生をセンター長にゼロエミッション国際共同研究センター、これを設立いたしたところであります。そして2番目の柱がグリーンファイナンスの推進であります。世界で巨額のお金となってます、この ESG の資金をイノベーションに呼び込むということで、TCFD ガイダンスなどによって企業の情報開示を促進し、グリーン投資ガイダンスによる金融機関などの適切な企業評価、そして TCFD 開示の国際会合 TCFD サミットの開催、まさにこの輪でございますが、こういうことをやると。で、3つ目がビジネス主導の国際展開、国際協力ということで、相手国のビジネス環境整備を通じてイノベーションの成果を世界に普及するということで、ASEAN を中心に低炭素技術普及のための官民ワークショップ、セフィバを開催しているところであります。で、世界的には 金融界、産業界ともに気候変動への対応が活発化をしております。脱炭素社会への取り組みというのは、既存産業にとっての生き残りをかけた戦略でもあり、新しい産業にとっては、まさにこれ水素などが上がると思いますが、主導権争いの主戦場になるということであります。この政策の舵取り次第で、我が国の産業競争力にも大きな影響を与える可能性があるということであります。ここでクライメートイノベーションの重要性ということですが、脱炭素社会というのは地球規模で目指すべき将来像だと。で、新興国を含めた世界全体で見ますと、技術面、そしてコスト面の双方で、すべての産業が一足飛びに進むわけではないということであります。ここの絵にありますように、ブラウンエコノミーからトランジション、そして脱炭素社会、こういう形でいくときに、日本企業はトランジション技術と、そして非連続のイノベーション技術、こちらでやっていくわけですけども、こういった形で世界全体の削減に貢献することが可能であります。こういうことで、クライメートイノベーションファイナンス戦略というのを、2020年の9月、この間、中間取りまとめをしたところであります。この内容について、これから少しお話をさせていただきます。まず、このクライメートイノベーションファイナンスの基本的な考え方でございますが、この地球温暖化対策の推進のためには、製造業の省エネなど、着実に低炭素化を進めていくこの移行の取り組み、これトランジションでございます。そして、再エネなど、すでに脱炭素化の水準にある取り組み、これはグリーン。そして人工光合成、こういった脱炭素化にする革新的な技術の研究開発、そして社会実装、こういった取り組みが革新的イノベーションでありまして、これらに対するファイナンスの促進が重要だということでございます。このために3つの基盤として、政府の気候変動対策へのコミットメント、企業の積極的な情報開示、そして資金の出し手によるエンゲージメント、この3つを整備をしていくということでございます。こうした中で、なぜトランジションが必要なのかということでございますが、各国間での CO2 輸出入量の状況を見ていただくと、この消費ベースの CO2 排出量から生産ベースの CO2 排出量、これを引いたものがこの下のグラフでございます。これを見ますと、自らの域内で生産ベースでの CO2 の排出は少ないものの、消費ベースでの CO2 排出量が多く、自らの域内のみをグリーン化するだけでは不十分というのが先進国でございます。で、国内における低炭素化のみならず、世界全体でこれ着実に排出量を減少させることが必要です。先進国の低炭素化の背景としましては、産業構造変化で輸入による海外依存が進んだ状況が大きいと、そういう研究も存在しております。各国によって地理的条件、それからエネルギー事情、産業構造、こういったものが違うから、各国の実情を踏まえて適切な移行、トランジションを進めていくことが重要ということでございます。このトランジションファイナンスの現状、課題、施策の方向性ということでございますが、現状と課題、実例が限定的で、金融機関とか発行体の双方で何をもってトランジションファイナンスと言えるかについて共通認識が出来上がっていない状態だと。そして、グリーンには至らない事前の策、グリーンウォッシングに見られるかもしれないといった懸念の声。からトランジションファイナンスがグリーンファイナンスと並んでパリ協定の達成に必要不可欠であることを認知される必要があると。こういうことが現状と課題でございます。施策の方向性といたしましては、こちらに右にあります国際原則を踏まえたトランジションボンドの発行に向けた指針の整備。これはICMAの原則を踏まえて、日本でのトランジションボンドの発行に向けた基本指針を年度内に策定予定でございます。で、2つ目が CO2 排出産業向けのロードマップの整備と投資促進でございます。CO2 多排出産業を対象といたしまして、産業政策を踏まえた業種別のロードマップなどを作成していくと。で、トランジション投資の好事例の創出も支援をしていくということでございます。続きまして、イノベーションの必要性ということで、これが先ほど申し上げました革新的環境イノベーション戦略の概要でございます。イノベーションアクションプランとして、エネルギー転換、運輸産業、業務家庭、その他横断領域、農林水産、吸収源ということを挙げてございます。それをアクセラレーションプランとして見ていきながら、それを今度は今やってますこの東京ビヨンドゼロウィーク、こういうもので発信をしていくと、こういう構成になってございます。 イノベーションファイナンスの現状、課題、施策の方向性ということですが、これも現状と課題です。日本はイノベーションについても技術的優位性は持ちますが、実質的にこの技術が社会実装していくためには、制度環境整備をしながら、ビジネス戦略とそれに紐づいた資金供給が重要ということが、左側の全体的な話でございます。で、右側にあります施策の方向性といたしましては、投資家向けのゼロエミ企業の見える化、それが革新的環境イノベーションに挑戦する企業群をゼロエミチャレンジ企業としてリスト化して今日発表しているところでございます。これらの情報を活用した金融商品訴訟への期待もしているところでございます。そして企業と投資家の対話の場ということで、水素、CCUS、再エネなど投資家の注目度が高いテーマで対話の場を設定していくと、こういうことでございます。これはゼロエミチャレンジということで、ご参考までですが、参考のところに挙げさせていただいてあります。このロゴマーク、これもぜひ覚えていっていただければというふうに思います。それから TCFD の賛同の現状ということですが、TCFD の賛同機関数は、このコンソーシアムの設立を境に世界最多と日本はなりまして、その後も TCFD サミットなど、こういった施策で着実に増加をしているところでございます。で、今後の TCFD の推進についてということですが、TCFD に関しましては、機械の開示というのはまだ著についたばかりでございます。TCFD のコンソーシアムと連携して、投資家にとって参考となりますトランジションやイノベーションの取り組みの開示を推進していくと。そして、世界最多の賛同機関を持つ日本として、国内においてさらなる開示の量と質の向上に取り組むとともに、これらの経験を世界全体での TCFD の普及に向けて共有をしていくということでございます。最後に、これが今後のクライメートイノベーションファイナンスの戦略のロードマップでございます。グラスゴーに向けて、これからも、例えばトランジションファイナンス環境整備検討会、こういった場でいろんな議論を進めていきたいというふうに思っています。ぜひ、こういうことで皆様方の協力を受けながら、進めていければというふうに思います。本日はどうもありがとうございました。
Thank you very much, Mr. Yamashita. Now we would like to move on to panel discussion 3. Promoting financing for transition actions and environmental innovations by using TCFD disclosures will commence. The facilitator of this session is Professor Ito Kunio, Chair of the TCFD Consortium and Director of Hitotsubashi CFO Education and Research Center. Now, I would like to pass the facilitation to Professor Ito.
ご紹介いただきました伊藤でございます。モデレーターを務めさせていただきます。パネルディスカッションを始める前に、まずは、パネリストのご紹介をさせていただきたいと思います。私の近くに座っている方からご紹介申し上げたいと思います。まず私の隣に座っておられるのが三菱商事サステナビリティ CSR 部長、藤村武弘さんであります。続きまして、オンライン参加となります、年金積立金管理運用独立行政法人、いわゆる GPIF の投資戦略部次長であります塩村健二さんです。そのお隣が金融庁総合政策局チーフサステイナブルファイナンスオフィサー池田聡さんです。オンライン参加になりますアクサインベストメントマネージャーズ調査部 ESG 調査エンゲージメント統括責任者で、イクマのトランジションファイナンスのワーキンググループの共同座長を務めておられます高月陽さんです。高月さんはロンドンから参加していただいております。昨日のリハーサルの時はT シャツでですね、極めてカジュアルな服装で参加されたんですが、今日はもう打って変わってネクタイ姿になっているので私驚きました。先ほどお伺いしたらロックダウン以降こうやってスーツでネクタイは初めてだと言っておられました。 そのお隣が経産省産業技術環境局、環境経済室長の梶川文弘さんです。どうぞよろしくお願いいたします。パネル3はトランジション、革新的環境イノベーションへの資金供給の促進と TCFD 開示の活用というのがテーマであります。パネルを始める前に、ご覧になられている皆さんの今後のそのディスカッションを深く味わっていただくために、私の方から少し背景、問題意識、そして狙いをお話しさせていただきたいと思います。昨年10月8日に TCFD サミット、これは第1回目でありましたが、開催されました。そこで確認されたのが、ダイベストメントからエンゲージメントであるということを我々は確認したわけであります。で、投資家あるいは企業経営者がエンゲージメントを効果的に推進するには TCFD のフレームワークを世界各国で共有して普及させていくことが重要なんだということを我々皆で確認共有したわけであります。TCFD の浸透をミッションとしまして、昨年5月27日に TCFD コンソーシアムが設立されました。先ほど山下局長からもご紹介ありましたように、この TCFD サミットの設立の日、すなわち昨年の5月27日に TCFD の賛同企業数が、日本の賛同企業数が162社になりまして、この段階で、世界で賛同企業数が1位、ナンバーワンとなったわけであります。最近では TCFD の賛同企業数はすでに300社を超えております。依然、世界の第1位のポジションを維持しております。TCFD コンソーシアムには現段階で280の企業、機関が加盟されておられます。そしてその活動の成果の第一弾としまして、グリーン投資ガイダンス、グリーンインベストメントガイダンスというのを昨年のサミットで世界に向けて発信いたしました。このガイダンスは気候変動情報をむしろ活用する、利活用する側の投資家、あるいは金融機関の皆さんに使っていただくという、そういう意味での手引きとして出したものですが、大変ありがたいことに、昨年 TCFD サミットに参加された海外の方から高い評価をいただきました。そして今年の TCFD サミット2020では、TCFD コンソーシアムは、気候変動情報を開示する側の手引きとしまして、TCFD ガイダンス 2.0 を作成し、世界に公表したわけであります。ガイダンス 2.0 では、日本、そして世界のベストプラクティス、75のベストプラクティスを収集いたしまして、ぜひこのガイダンスに盛り込まれているベストプラクティスを世界で共有していただきたいというように思っております。さらに気候変動情報はリスクに関する情報としても重要ではありますが、同時にオポチュニティ、機会に関する開示という点も大変重要であります。オポチュニティへの評価が投資につながって、その結果、高いリターンに結実するという、そういうような好循環も出始めております。まさにブラウンからグリーンへのトランジション、あるいはイノベーション創出に向けて資金が供給されることを我々はぜひ促していきたいというように思っております。それではディスカッションに入りたいと思います。まず GPIF の塩村さんにお願いしたいと思います。今申し上げたように気候変動リスクへの対応というのは従来から強調されていたわけでありますけれども、非連続なイノベーションに向けた取り組み、すなわちオポチュニティにリスクマネーを供給するには、やはりオポチュニティの評価に目を向けていくことが必要であると思います。 そういう点でまさに塩野さんはアセットオーナーの投資の責任を負っておられるわけですけれども、そういう意味ではオポチュニティ評価が運用実績にどういうようにつながっているのか、ぜひエビデンスも交えてお話しいただければというように思います。塩村さん、お願いします。塩村さん、マイクのミュートを解除していただけますか。ちょっとお待ちくださいね。今、係の方が駆けつけますので、お待ちください。まあ、やっぱりリスクの点も大事ではありますよね。まあ、オポチュニティも大事なんですけど。そうしましょうか。それではですね、少し修復に時間がかかるやもしれませんので、ちょっと次のパネリストの方に、恐縮ですが、スキップをさせていただきたいと思います。高橋さんは長く海外におられますので、日本語よりは英語の方がいいということですので、高橋さん、could you talk about a global perspective in terms of financing for transition from brown to green and investment for innovations? In addition, could you provide us with your expectations to Japan, which is focusing on possibilities of TCFD as well as risk? Go ahead, please.
ありがとうございます。少し日本語がぎこちなくお聞き苦しいかもしれませんので、英語でお話をします。Thank you very much to everybody here. I think the challenge of what we are faced is being very well understood in Japan now. And I think the best way to put it is that if we are to try and keep global warming to a level which is aligned with the Paris Agreement, this is going to have to be a joint effort by all of us across different countries, across different economic sectors, and that includes government bodies, that includes industrial players, civil partnerships, and of course financial institutions as well. And like the GBIF or here at AXA, we're a French-based European asset owner with an asset management body. Climate change we see as one of the major areas of forward-looking risk that could significantly harm our investments if we do not do anything about it now. And that's the key point, is that by taking action, this is something that we could improve the opportunities and minimize the risk. And I think as we've heard earlier, the concept of climate transition finance is actually really based on us all taking action. As you've heard, I also sit as the co-chair of the International Capital Markets Association's Climate Transition Finance Working Group. And through this, we've been working to create market-level guidelines that then would be used around the world so that we have a harmonized set of definitions about what constitutes climate transition finance. 私のスライドをお願いします。次のスライドをお願いします。This is a complicated looking slide, but actually there's a very simple message. To achieve the Paris goals, you need to look at the graph on the left. It looks like a mountain slope where you might be able to ski down, and the bit in blue shows how much emissions we are emitting today in 2020 and what we need to get to in 2050, which is on a net basis, zero emissions, i.e. Once accounting for negative emission technologies, we need to be hitting zero greenhouse gas emissions. And to achieve that, the slope of decarbonization is very steep. So to be in line with a 1.5-degree scenario, which is global ambition, it's going to be very hard. We have to cut global greenhouse gas emissions by 50% by 2030. So there is no time to waste. And the urgency of dealing with this matter is urgent. 次のスライドをお願いします。There's two aspects though, when we think about what we need to decarbonize. One is the bit that I think all of us have started to think about a lot over the last 5 to 6 years in particular, which is about the supply of energy. How do we power the global economy? And that's obviously been fossil fuel based in most countries, and gradually there's been a shift to gas, and then obviously renewables as well over the recent time. The key thing to note here is that the most carbon intensive energy source, which is coal, has no future in the energy supply mix, and that by 2030, the amount of energy being provided by renewables have to be 3 times what it is today. So it's a big shift, but I think that the general understanding of this transition is well understood. Plus also the technology is there now. So the renewable energy is now increasingly cheap, it's cost effective, and it's really down to political will, by economic activity, a player will, so the electricity companies will, to make this transition. 次のスライドをお願いします。But then there's this other big piece of the puzzle, which is the demand side, the users of the energy. And the chart you see here is very complicated, and I really recommend, if you're interested, to go to the World Resource Institute website, and it shows where the energy is being used. And what you see is that these are all the economic players that are currently using the energy. These are companies and industries that have essentially allowed us to create the world economy after the Second World War. It's brought us a lot of prosperity, but I think we realize now that there's been a large environmental footprint. And the challenge for this is far more complicated than the one that we're seeing in the supply side, because there are many economic players. And in many cases, as we've heard already, the technologies, the processes, the products aren't there yet to be able to move today to a net zero world. So that's why we have this period that we see for the next 20 to 30 years, where we have to significantly change the way these industries are operating and producing. And that really is where the money is going to be needed. It's really the key challenge point of climate transition finance. And what we do know is that this is going to be expensive and disruptive. But asset managers like us, I think there is a strong will to support the climate transition financing needs. Next slide, please. So what are we doing about it? Well, we think that it's important. We need to propose ideas to change it. And one of the things that we did last year was to call for a new asset class called transition bonds. This was really a call to action to say to the industry, we need to talk about this. It's important that we don't just focus on what we call green finance. The brown to green finance is also an important component of what we achieve. Once we published this paper last year, we had a lot of response, many positive ones, some people questioning our intent, but that allowed us to set up a working group in the ICMA Green and Social Bond Principles. More than 80 capital market participants are in this working group, including many from Japan, but also from Canada, North America, emerging markets. And that's a key point, is that this concept of climate transition has to be global and inclusive. What we're doing now is to work within this group to put together the rules or the guidelines of what climate transition finance means. Next slide, please. And these are the 4 key points that I just wanted to highlight before I finish. The first point is that there has to be intention from the corporate issuer to achieve the Paris Agreement. So that's the first one, is about having strategic goals. Second one is about making sure that there are corporate practices and that's disclosed sufficiently. We believe that the Task Force for Climate-Related Financial Disclosures is a very powerful tool, and we really support it. But we also understand that not everyone can do TCFD reporting today, and so education needs to take place. And then the third point, which is the hardest, but most important in some ways, is about the scientific credibility of climate transition, which is that unless your business plans are trying to be aligned with net zero and 1.5-degree pathways, you are going to overshoot and will not contribute fully to achieving the Paris goals. And then the final point is, obviously, as an investor, we need this wrapped up in a financial instrument. So it's about how that is then linked to transparency or strategic goals. And what we hope is that this document will be finalized and published to the market in the next month or two. And so please watch this space. And the key thing is that for me, as being Japanese, I believe that Japan has a very important role to play in climate transition, not just for Japan, but also the technologies that it can provide to the rest of the world to try and achieve what is fundamentally the biggest challenge of our life. Thank you.
高杉さん、ありがとうございました。それでは、塩村さんの通信環境も修復したようですので、それではプレゼンテーションを、リスクからオポチュニティにトランジションしたいと思います。塩村さん、お願いします。
はい、聞こえますでしょうか。
大丈夫です。
はい、よかったです。GPF でよろしいですか。GPF では昨年から
どうぞ続けてください。
よろしいですか。はい、GPF で昨年からESG 活動報告 TCFD に沿った開示というのをやっておりますが、今年は ESG 活動報告の別冊として、GPF ポートフォリオの気候変動リスク機械分析というものを作成して、宣言いたしました。で、次のスライドをご覧ください。こちらの写真になりますが、こちらでは株式や債券のみならず、負債などについても気候変動リスクと機会について、フッチー社、トゥルーコスト社、MSCI 社の協力の下で多面的に分析を行いました。本日はこのセッションのテーマに合わせまして、気候変動に伴うリスクとオポチュニティが企業価値にどのようなインパクトをもたらすのかについて、焦点を絞って紹介したいというふうに思っております。こちらの分析はGPF のホームページにも出ておりますので、ご覧いただければと思います。で、次のスライドお願いします。はい、こちらの分析の中核となる分析になりますが、クライメットバリアとリスク、CBAR というものを使っております。気候変動に伴う政策リスクや低炭素社会への移行に伴う技術的機会、海面上昇や自然災害などによる物理的リスクが企業価値や証券価値に潜在的にどれくらいのインパクトをもたらす可能性があるのかを分析するツールというふうになっております。この CBAR というモデルが特に優れていることは3つあります。まず、政策リスク、事業機会、物理的リスクを金銭的評価という共通の尺度で統合的に評価できること。次に、気候変動のシナリオ別に企業価値が何%増大、減少するのか、具体的な数値で示すことができること。で、3つ目は、企業価値に与える影響を株式と債券に分離できることです。前年度も GPF では TCFD に沿ったシナリオ分析をやっておりますが、こちらは投資先企業がコミットしている温室効果ガス排出量通りに排出された場合に地球の平均気温が何度上がるのかという分析でしたが、TCFD というその名の通りですね、財務インパクトというのは分析できなかったわけですけれども、今年度はですね、そちらにチャレンジして分析をやっております。で、今回の分析の中核である、低炭素技術機械 CBAR についてご紹介します。次のスライドをご覧ください。この分析では各セクターに求められる炭素削減コストは同一セクター内の環境技術に同額の事業機会をもたらすという過程を置きまして、 その環境技術から得られる将来利益を企業の特許スコアを基準に分配する。個別企業レベルで低炭素技術機械 C バーというものを算出します。実際は非常に有望な低炭素技術であっても特許を取得しないケースなどもあるわけですし、またセクターをまたいでですね、これはセクター内での移転ということで分析に前提を置いていますが、セクターをまたいでニーズがシフトすることもあるわけですが、そういったことは今回分析できておりませんけれども、そういった前提のもと分析を行っております。で、次のスライド。世界が2度シナリオに沿った政策を取った場合に、国内株式の資産価値がこちらのグラフにありますように、11.2% 増大する可能性があるということが示されました。外国株はマイナス 7.5% となっておりまして、特に国内株式は技術的機会による企業価値の増大の効果が移行リスク、物理的リスクによるネガティブな影響を大きく帳消しするレベルでの寄与があるということが見られておりますので、非常に注目できる結果になるというふうに思っております。で、次のスライドをご覧ください。先ほどは2度シナリオでしたけれども、こちらでは 1.5 度シナリオ、3度シナリオに変えたときに、株式価値、債券価値がどう影響するのかというのを分析している。で、株式で言えば 1.5 度シナリオでは 19.3% の価値が増大する。2度では 3.1、3度ではマイナス6ということで、1.5 度という最も環境面での制約が大きい、シナリオの方が株式にとっては企業価値を増大する可能性があるということが示されています。一方、社債についてはですね、制約が大きくなるほど債券価値は減ると、減少するということが示されていまして、非常に興味深い結果かなというふうに思います。これは債券と株式とでは金融商品としての特性の違いということが影響しているかと思います。で、次のスライドをご覧ください。こちらセクター別に、その総合 C バーの分布状況を示しておりまして、左側にある暖色の色ですね、こちらについてはネガティブな影響を及ぼす企業の分布、逆に右側にある寒色系のものはポジティブな影響を及ぼすグループということで、エネルギーですとか公益素材といったところについては、この棒グラフが長く出ているわけですが、左の日本国内株と外国株を比べていただきますと、特に右側のオポチュニティの方でエネルギー、貿易、そういったところの日本企業のウェイトが高いということがお分かりいただけるかと思います。こういった分野において日本企業の環境技術が見直される可能性があるのかなというふうに思っております。で、主なインプリケーションを次にまとめております。次のスライドをご覧ください。国内企業は低炭素技術による収益機会が大きいことで、低炭素社会において外国企業と比べて株式価値が大きく増大する可能性がある。2つ目、3度シナリオより2度、1.5 度と環境面での制約が大きい条件下の方が低炭素技術による収益機会が大きくなることから株式価値は増大する傾向がある。3番目、エネルギー、公益素材など環境負荷が大きいセクターにおいては企業価値を大幅に低下する企業が多い一方、逆に企業価値を大幅に拡大する企業も多く、業種内で優秀な可能性があるというふうに考えております。で、こういった分析結果になっておりますが、低炭素社会の到来は、日本企業にとって大きな、逆に言えばチャンスということが、今回の分析で示されたと思いますし、運用資産の半分を国内資産に投資する GPIF にとっても、この大きな恩恵があるということだと思います。また、技術的機会については、今回特許情報をベースに分析をしておりますが、TCFD による技術的機会の開示がより進めばですね、より分析の精度も上がって、日本企業の株式価値が正しく評価されるようになるんではないかというふうに考えております。私のプレゼンは以上になります。
塩村さん、ありがとうございました。 では続いて、経済産業省の梶川室長にお願いしたいと思います。先ほど山下局長も熱く語ったクライメートイノベーションファイナンス戦略2020の事務局として関わられ、私も座長として関わっておりますソサエティ 5.0 に向けた環境イノベーションファイナンス研究会の事務局としても、ご努力いただいております。梶川さんにこの辺の一連の流れについて、お話しいただけますか。
はい、ありがとうございます。経済産業省の梶川です。せっかく素晴らしいプレゼンテーションをいただいたので、それを踏まえたちょっとコメントを2点ほどさせていただきたいなと思っております。まずGPIF のですね、塩村さんのプレゼンテーションです。すごく示唆深いなと思ってます。でプレゼンテーションの中身をですね、一言で言えば、日本っていうのはオポチュニティ先進国になり得るんじゃないかというふうに思っております。2度シナリオから 1.5 度シナリオっていうですね、より厳しいシナリオに行った時もですね、テクノロジーでのオポチュニティが拡大するという、そういう結論ですけども、これは低炭素、脱炭素に向けてですね、やはり日本のイノベーションの潜在力がすごく高いのではないかということが言えるのではないかと思っています。他方は日本はこれまでですね、技術はいいんだけどビジネスで負けるということが起きてるっていうのも事実かなと思っています。例えば太陽光パネルですね、辺は技術はあったけども実際市場化していったのは中国が強いということもあってですね、やはりイノベーションを社会実装していくという時に大事だなと思うのはですね、政府、あと企業、あと投資家、これらがですね、本当に建設的な対話をして、かつどういった将来像を共有するかということがですね、大事だなと思ってまして、それによって市場を作っていくという、こういう考え方が大事だと思っています。で具体的には政府はですね、特に環境エネルギーの分野というのは政策のインパクトも大きいことがありますので、民の活力をいかにうまく引き出して、それでスマートに制度設計していくかということがまず大事だなと思っています。で2番目として事業会社はですね、これはなかなか難しい議論だとは思うんですけど、やっぱり技術至上主義になりがちなところがあるかなと思ってまして、世界でどういうふうにこの技術を普及させるのかっていうコスト面も含めたビジネス戦略をより練っていくということが大事かなと思っています。で投資家の方についてはですね、これ比較的過去のデータから分析するということが多いなと思ってまして、今回のGPIF のですね、分析は特許、あとは本当はそれ以外にいろんなテクノロジーのですねポテンシャルがあるなと思ってまして、こういうものをある意味フォワードルーキングの方法を投融資のですね、判断にどういうふうに組み込んでいくか、これが大事だなと思ってます。これをうまくやらないとですね、イノベーションの社会実装にいかないんじゃないかなと思ってます。でこのイノベーション社会実装を進めるための一つの手がかりとして TCFD っていうのはすごく大きな基盤になるんじゃないかなと思っています。事業会社がですね、さまざまなイノベーションの取り組みをするときにですね、どういう形で開示するのかと、その開示をしたものを投資家がしっかり評価していくっていう、そのポジティブなですね、ループを生み出していくっていう、それをやるのはですね、実は先ほどのGPIF のですね、塩村さんの話によれば、日本が一番いいポジションにいるんじゃないかという考えを持っています。でそれを踏まえてですね、先ほど山下からですねご説明したようなイノベーションをどういうふうに推進していくかということで、今日梶山大臣からですねゼロエミッションチャレンジという取り組みをさせていただきまして、まず最初にこの分野の第一歩を踏み出すということとですね、その後やはり先ほど申し上げた事業会社ゼロエミ企業とですね、あとは投資家さんと政府がですね、ある程度密になっていろんな対話をしていくということがまず大事だなと思っています。ですみません、もう一つちょっと長いですが言わせていただきますと、いわゆるイノベーションだけで全てが解決するのかというとですね、そうでもないというのもまた事実かなと思ってまして、アクサの高槻さんからですねトランジションファイナンスの話ありました。でトランジションファイナンスって概念がまだわからない部分も多いとは思うんですけども、やはりサステナブルファイナンスの中でグリーンファイナンスとともにですね、しっかりと位置づけがされていくということが大切かなと思っています。先ほどのGPIF の塩村さんのプレゼンの中でですね、CO2 の多排出産業、ユーティリティとか、あとはエネルギー、素材、このあたりっていうのはかなり 排出量多いですけども、勝ち負けが結構はっきりしてくるんじゃないかと。で、その中で日本の企業は海外の株に比べるとですね、よりポジティブなその企業が増えていくというお話があったなと思ってます。なので日本のですね、企業群はまさにこのトランジションのところについて省エネ技術とかエネルギー転換とかですね、様々なものを持っておりますので、そこにいかに投資をしていくか、それを投資家が分かっていただくという、ここをしっかりやっていく必要があるなと思っています。で、我々そういう意味では、生間さんのですね、今のトランジションワーキングの、議論をですね、踏まえた上で、国内でそうしたボンドなりですね、ローンが進むような環境整備をしていって、イノベーションもトランジションも双方とも促進していくと。そのために必要なその基盤として TCFD を活用していくということが大事ではないかと思っております。以上です。
ありがとうございました。それでは続いて、三菱商事の、藤村さんにお願いしたいと思います。藤村さんは、日本を代表して TCFD、本部の、メンバーとして参画していただいておりますので、TCFD が今どういう問題意識を持ってて、そしてどういう方向に歩を歩ませようと、前へ進めようとしているかということについては、まさに事情に精通しておられますので、そういう TCFD の最近の問題意識、あるいは動向もお話しいただきたいと思います。で、合わせて、最近欧州あたりで、TCFD 開示をその制度化しようという動きも出ておりますので、その辺も藤間さんから語っていただければと思います。よろしくお願いします。
はい、ありがとうございます。ご質問いただいた点の前に、ちょっとトランジションとイノベーションについてちょっと触れておきたいと思うんですけども、TCFD もですね、脱炭素社会に闇雲に向かっていく企業の姿を開示しろという、こういう開示基準じゃございませんので、あくまでもそのトランジションであったり、イノベーションであったり、必ずやこの2度、ないしは 1.5 度目標を達成する上でですね、これから起きていくこの外部環境の変化、これに対して企業がどういった形でリスクをミニマイズして、で、機会を成長に取り込んでいくかと、そこを見たいっていうのが TCFD なので、まさに今のトランジション、イノベーション、オポチュニティの部分をしっかり開示してですね、で、まさに TCFD っていうのは、名当て人は資本市場ですから、資金の担い手に向かってこれを開示してですね、そこで資金還流、資金を得ていくというような格好のツールというふうに思っております。で、ご質問の最近の動きということでありますけども、今 TCFD の本部の方で進めているのはですね、11月に予定しておりますけども、ステータスレポート、これ毎年出しておりますけども、このステータスレポートの最後の作業をしております。で、合わせてですね、TCFD の開示はだいぶ進んできたんですけども、やはりその項目、11項目ある中でですね、まだまだ相対的に開示が進んでない分野っていうのがございます。一つはシナリオ分析の部分。もう一つはですね、リスク管理、気候関連のリスクを統合リスク管理の中に組み込んでいくと。このあたりの開示が相対的に低いんですね。で、そういう意味では、今朝というか今日、シャピロさんの説明にもありましたけども、この辺に関する解説書を出してですね、さらに TCFD の浸透を図っていこうというようなことを今、検討しております。で、伊藤先生おっしゃった法制化の動きですけども、確かにヨーロッパの一部でですね、そういった形で動きが見られます。TCFD を活用して、非財務情報中んづく気候変動の開示をするというのを制度化しようという動きであります。で、この動きっていうのはですね、気候変動の重大さを考えればですね、気候変動がもたらすリスクと機会の重大さを考えればですね、おそらく進んでいくんだろうなというふうに思われます。で、一点ちょっと気になるのが、この法制化制度化の内容にもよりますけども、仮にこの制度化法制化がですね、企業による情報開示の画一化、標準化をもたらすというようなことになってしまうとですね、必ずしもその TCFD がもともと意図してたことと違ってくるんじゃないかなというのは個人的に思います。当然、資本市場に向かって情報開示するわけですから、比較可能性っていうのは重要なファクターだと思いますし、TCFD の提言の中においてもですね、この比較可能性は十分配慮してやっていくんだということが謳われています。ただ今出来上がったこの TCFD の提言はですね、皆さんご案内の通り、 程よく幅広いフレームワークになってるんですね。なので、あまりこのチェックボックス的な開示ではなくてですね、このフレームワークの中で企業が、その業態、ないしは規模に応じてですね、自分たちの機構対応をきっちり開示していくと。で、投資家とエンゲージメントしていくというのには非常に使い勝手がいい中身になってますので、これが、なんとなくこうボイラープレート化してしまうというようなことがないようにですね、なっていかなきゃいけないなというふうには感じております。以上です。
ありがとうございました。今の藤村さんの、説明を受けて、気候変動関連情報の開示が、法制化しようという、動きがある一方で、日本はその気候関連情報開示の制度化という点では、もう一定の基盤があるんじゃないかという声も聞かれます。で、むしろソフトローで対処した方が、今藤村さんが言ったようなステレオタイプな開示ではなくて、もうちょっと企業のそういう工夫を凝らした、そういう意味ではまさにイノベーティブなディスクロージャーができるんではないかという、声も聞かれます。その辺も含めて池田さん、少しご意見をいただけますか。
ありがとうございます。金融庁の池田です。今ご質問いただいた件にお答えする上で、一つまず申し上げておきたいことはですね、TCFD サミット去年もやりまして、私もその時も参加させていただいたんですが、この1年、いろんなこのクライメットファイナンスに関連する議論の進展が見られまして、でまさにそれをうまくこの経産省さんの方ですね、クライメットイノベーションファイナンス戦略ということでまとめていただいていると思うんですけども、どうしてもそのある種、画一的なですね、グリーンの定義でありますとか、タクソノミーでありますとか、そういったところにこのクライメットファイナンスの議論が注目が行きがちなところがあるんだと思うんですけれども、むしろそのパリ協定、全体として実現していく、ネットゼロに向けてですね、各企業がそのどういうパスウェイの中でですね、具体的にそのスコープ1、2、3含めてその排出の削減をしていくのか、そこにどういう先ほどお話のありました技術的機会を見出していくのか、そしてその他いろいろなリスクに対応していくのかと、こういったあたりを的確にですね開示いただくということが、まさにそのグリーン、それからトランジション、イノベーションでファイナンスと、TGIF というですね標語も作っていただいてますけども、それを実現する上での基盤としてのですね TCFD の役割が多分あるんだと思いますね。でそれをやっぱり効果的に推進していくためにもですね、今藤村さんからもご指摘ありましたけども、非常に画一的で、ある種比較可能性だけを追求すればですね、その方が分かりやすいのかもしれませんが、やっぱりそれぞれの企業の皆さんが置かれた状況の中で、どういうトランジションをですねまさにしていくかということの開示っていうのが非常に重要になってくるんだと思います。でそういう意味でそういう方向性をですね、まさに日本としてはTCFD コンソーシアムの設立も含めですね推進してきたわけです。で今グローバルに TCFD の制度化あるいは義務化ということが言われてるわけですけども、ある意味それはなかなか増えるけど踊らずみたいなですね、各国の苦しい事情があるんだろうと思います。逆に言うと我々はそのコーポレートガバナンスコードもありますし、さまざまな法制の中で、この TCFD の制度的基盤もありながらコンソーシアムみたいなツールを通じてですね、TCFD に向けた企業、それから投資家金融機関の皆さんの動きを盛り上げてきたという経緯があると思います。その中で日本が何をすべきかということなんだと思います。で やはりこの何度も紹介ありますけども TCFD に賛同している企業の数でいうとですね、日本がやはりリードしていると、そういう意味では逆に言うと制度化義務化されてもある種困らないポジションにいるという言い方もできると思うんですけども、ポイントはやはり繰り返しになりますけども、それぞれの企業さんが置かれた状況の中で、その現実的なかつパリ協定の全体的な目標と整合的な取り組みを企業がしていく、そしてそれに伴った機会の追求、そしてリスクへの対応をしていくというところに、非常にある種自主性と柔軟性を確保しながら、日本としてもですね、我々もこれだけ賛同してるからいらないよって言ってもなかなか国際的にはですね理解を得られない部分もあると思いますので、その制度的な対応っていうのはやっていくべきだろうと思いますけれども、そこはやはり伊藤先生のお話ありましたように、ソフトローといいますか、そういう確実的一律的なものでなくて、やはりそれぞれの置かれたリスク機会に応じて適切にこの開示をいただくようなフレームワークというのを考えていく必要があるんだろうと思っております。でそういう意味では、いろいろこれ私が言い出したわけでは必ずしもないんですけども、コーポレートガバナンスコードがいいんじゃないかとかですね、そういう話もありました。確かにコーポレートガバナンスコードはある種スチュワードシップコードと対になりまして、この企業と、投資家の対話による企業価値の向上を、推進してくるツールとしてこれまで機能を果たしてきたと思っておりますし、まさにコーポレートガバナンスコードの今の、まさにそれが制度的基盤と言われているわけですけれども、中にもですね、法定あるいは法定でないものも含めて財務非財務両面についてですね、積極的にこの投資家とのこの対話のために開示を進めていただきたいということがすでに書かれておりますので、これを一つの出発点としつつですね、グローバルな動向の中で、日本も皆さんの企業の皆さんの自主的な取り組みによって、進んでるわけですけども、制度面でですね、それを後押しするような形で、その制度的基盤をさらに強化していくと、こうした方向性はおそらく今日午前中に経団連さんもサステナブルファイナンスの基本的考え方と今後のアクションという、ものを出されて公表されておりますけども、そこに書かれている考え方ともおそらく整合的なんではないかなと思っておりますので、皆さんと共同しながらですね、そうした方向を模索していければなと思っております。以上です。
ありがとうございました。このパネルディスカッションでは、TGIF、トランジション、グリーン、イノベーション、ファイナンスと、この4つのキーワードで議論してまいりました。とりわけ TCFD のポシビリティあるいはオポチュニティに力点を置いて議論してきたわけですけども、さすがにオポチュニティの議論をですね、40分で尽くすことは難しいわけでありまして、あっという間に予定した時間が来てしまいました。来年のサミットでは、このオポチュニティの実例をより多く集めて、世界の皆さんにまた発信していきたいというように思っております。我々日本も今池田さんが言われたように、TCFD の賛同企業数が300社を超えて、世界をリードしているわけです。そして TCFD コンソーシアムの賛同企業数、加盟企業数も280社を超えた。で、数は数ではありますが、ぜひ数を、まさにオポチュニティに変えてですね、バネにして、世界の皆様と一緒にこの気候変動問題に取り組んでまいりたいと思います。その中でやはり情報開示というのがドライバーになりますので、ますます TCFD の拡充浸透に我々も努めてまいりたいというように思います。本日はありがとうございました。
Thank you very much, Professor Ito and the panelists. Now, after break, the last session closing remark will start. Participants online, please go back to the timeline and join the next session, closing remark. Thank you for waiting. Lastly, Mr. Mizuno Hiromichi, Special Advisor of METI and TCFD Summit Ambassador, will give the closing remark. Mr. Mizuno, please.
Ladies and gentlemen, thanks again from the Japan for participating the second annual TCFD Summit. It's been a great success to have all the global leaders to contribute to this event, showing the leadership of Japan as well as the older global leaders' commitment to make this society more sustainable by leveraging the idea of finance, innovative finance, and which to be powered by TCFD disclosure framework. So I would like to thank again all the staff of METI and everybody who made this meeting possible. Today, we experience wildfires and floods around the world. It is common understanding that environmental actions are important and urgent. The need to establish sustainable society and sustainable environment after this pandemic is becoming strongly recognized. The TCFD Summit 2020, the second annual summit following last year's successful event, it is really encouraging to see that we made a lot of progresses and built upon the basic concept agreed last year, which was from divestment to engagement, more responsible ownership, and assessment and evaluation of opportunities as well as risks. The year, we are looking back at what has been achieved over the last 12 months. Again, we are very encouraged to move forward. And today, we had the opportunity to hear from those global leaders that how much progress we made, and also how much more we need to do. Since last year's TCFD Summit, more than 500 institutions signed up to TCFD, and now the total aggregate number of the TCFD supporters exceeded 1,400. The host country of TCFD Summit, Japan, now have more than 300 TCFD supporters, and we have been trying our best to show the leadership and champion TCFD movement around the world. Japan's TCFD consortium is a strong role model as the world's largest group that acts as a bridge between financial institutions and non-financial institutions in a collaboration with the government agencies. It has significant contribution to the global TCFD community, including publication of Guidance 2.0 with the best practices. There are also observed worldwide progresses in the quantity and quality of disclosure in line with TCFD, such as industry-specific guideline made by WBCSD and the guidance to investors by UNEP-FI and a PRI. A global foundation for a constructive dialogue between corporations and financial institutions has been established. Based on those progresses, we talked on today establishment of TCFD disclosure practice and the potential of the framework beyond disclosure of just risk items. During today's discussion, there are several important suggestions has been made, and which I would like to share with you as a summary. Disclosure aligned to TCFD has become widely recognized as a standard disclosure framework for the climate risk and opportunities. What matters is, however, climate exposure should not just be a static disclosure, but also how they are managing the climate-related risk as well as opportunities, and have to continue to develop as the dynamic disclosure framework and strategies. We want climate change to be taken into account, like interest rate and credit risk are the basic financial risk factors. And several the panelists and the leaders mentioned that it's becoming the case. And we just want to make sure people treat the TCFD disclosure as just a conventional risk return framework for investment analysis. The mechanism to identify the risk and opportunities and discuss them at the management level to react and as an organization need to be established. Sharing information, including the experience of establishing effective governance mechanism, could be effective amongst industries who have the same industry-specific materiality, so that more companies can join the TCFD community. It's very important for us to make sure the people who started early will become a role model, so that the other people as a follower can take the advantage of learning curve. Secondly, there was some suggestion made about the potential of this disclosure framework. TCFD disclosure started as the disclosure framework to help the financial investors, the financial institution, to analyze the climate risk of their portfolio. But now, the more corporate proactively participated in this initiative, and we are now getting to the stage that we use it beyond that just the disclosure framework. So from the corporate perspective, they want to use the TCFD disclosure strategically to attract the capital to support their innovation. And also from investors, they want to use the TCFD as a way to have a constructive dialogue with the corporations. So this is becoming more and more strategic dialogue, or conversational tool for the corporates and the financial players. Japan's companies that look ahead, setting net zero carbon targets and developing product and services that support more resilient future can survive, and the measures against global warming are no longer at the cost but the source of competitiveness. And this is becoming more a consensus among the investors and the corporate. And the Prime Minister Abe last year said, climate action is no longer a cost for the business, but it's opportunities, which I personally strongly and genuinely believe. As people say, climate change is the biggest risk we are facing. That means, and that should be translated, biggest opportunities which we are having in our generations. And we need to make sure that all the innovation made by corporate to support that transition to the sustainable economy should be financed properly and should be analyzed properly. So TCFD is a framework to give those the analytical process more fairly reflect the corporate's effort toward that decarbonization of the society. In order to reduce CO2 on a global scale, to finance transitions and the green project and also finance the innovations are all important. And we need to consider how to include them in a TCFD disclosure. And we just do it in a way, as it didn't start it that way, but now how to involve and include the technology or innovation in the disclosure framework is something has been discussed throughout the day. And I think that Japan should take a leadership and getting a help or assistance from global leaders in this field. Finally, at the beginning of this today's conference, Mark Carney mentioned about the the COP26. There will be a discussion to make this TCFD disclosure mandatory financial disclosure framework. It is suggested like a pathway to the mandatory disclosure should reflect all the different jurisdictions and all the different economic environments. But having said that, we just cannot use as our unique situation an excuse not to do it. And there's several different ways to make it mandatory. And I was very encouraged to hear that the people, some people like, the Ikeda-san from the FSA talking about the different approaches. So mandatory doesn't necessarily mean it will make the legit regulatory requirement, but they can have some different ways. And I think the Japan and the other jurisdiction should have more creative approaches to make it effectively mandatory. But at the same time, the voluntary framework of TCFD really helped the Japanese corporate in particular to make more, aggressive disclosure. So that kind of balancing act will be necessary and it should be discussed. I also hear several very strong commitments from the participant of today's discussion. So asset owner made it clear that as a universal owner, they continue to push this agenda. And on the top of the people like CalPERS, GPIF disclosing in accordance with the TCFD, but they will going to ask their asset manager and the portfolio company to do the same. And it's very convincing for the asset owner to say their job is to manage their asset for a long-term perspective to reflect that the TCFD type of disclosure is critical. And asset manager, we had several today, and they're all talking about the importance of the climate risk integration into their portfolio analysis. And they recommended strengthening the disclosure for more transparency and active management by investor will be their fiduciary duty. And some of those asset managers talk about the importance of the engagement. Engagement is another way to describe the constructive dialogue between the financier and the corporations. So again, they are committing to make their dialogue more constructive, and we want to make sure that they will walk the talk. And we also had a guest from Europe and the European Commission, given the importance of TCFD recommendation, continue to strongly support that framework. And as you're probably aware that the EU is pushing the boundary by introducing taxonomy and etc. So they are actually, using the TCFD as a leveraging point to promote more stringent green, regulations, which is one way to do that. And the other country may come up with different, different approaches. But it's good to see, EU again confirm their commitment to a green economy. And finally, not the least, Japanese government will continue to contribute to decarbonization of the world. And we heard the very strong messages from Prime Minister Suga and Minister Kajiyama that Japan is going to not only contributing to net zero or the society, but we will come up with and invest into the innovation, which will deliver below zero, because you cannot make everything net zero. I mean, you cannot achieve net zero by making every single item zero. You're going to have some positive, so you need to have the less than zero to make whole system net zero. So I think today's Japan made a very clear commitment that we will use our innovation and technology to achieve it, and we will continue to champion TCFD effort by continue to refresh TCFD guidance, the guidance and the other, green finance related, the other guidance which government agency, particularly METI, supported. And I'm very encouraged to hear Japanese corporate leaders today has been openly discussing, their expectation and their challenges by using TCFD for their disclosure framework, which I think it was very widely heard by investor community, as we had a lot of the foreign financial institutions listening into today's conference. So to conclude my closing remark, once again, we wanted to get together to accelerate the transition to sustainable society. And last two TCFD Summit, we continue to push the agenda But everybody is becoming more and more open and more talking about the real action than the concept, which is very encouraging and will going to be a trend for us to work together. So next year, November, the COP26 will take place in Glasgow, and the preparation for that has already started. And I am convinced today, by listening to all the messages and all the panel discussion, we will continue to make more actions, and we will make actions for all the stakeholders, and all the stakeholders will take an action to achieve our common goal, which is to deliver the net zero and a sustainable society. And Japan and METI will committed to facilitate discussion on the TCFD because we believe, as the other panelists and the contributor believed, this is going to be one very important and commonly used critical disclosure framework, which has more potential than just being financial disclosure framework. So thanks again for everybody who participated or listening into today's summit. And I'm looking forward to seeing you in person, hopefully next year. Thank you very much.
Thank you very much, Mr. Mizuno. This concludes the TCFD Summit 2020. We will be sending a questionnaire to participants today via email. We appreciate your cooperation in filling out the questionnaire. Your opinions will be valuable in planning for and improving the TCFD Summit. Thank you for participating in the TCFD Summit 2020 today. Hope to see you next year in TCFD Summit 2021. Thank you.